All right, friends. Now we are going to start with our first basic chapter. Okay, and we are basically going to start with the standards. Okay, but again, before I start with the standards, I'm going to give you an overview of what are the different standards that we have in our course. What could be the different types of standards? Okay, so if you can see the name of the name of the chapter is basically quality control and engagement standards. Okay, quality control and engagement standards. We have two different types of standards in our course. One is quality control and the second one is called as what? Engagement standard. Okay, now please understand, all of you know this, that a chartered accountant, once you become a chartered accountant, probably you can serve the society in two manners. Either you can be in practice or you can be under employment. Okay, a chartered accountant who is into practice, he is called as practitioner globally. We call him as what? Practitioner. Internationally is called as practitioner. All of you know this. A person who is into practice, he will be having something called as COP, certificate of practice. Okay, and then either he can be in job. Okay, now when I say a chartered accountant is in practice, let's say he will be able to provide different types of services to the society. One service will be called as assurance service. Okay, and the second part is basically other service. So practicing chartered accountant, that means a practitioner will be able to serve the society by offering these two services. One service where he is trying to give some assurance. Okay, and secondly we have something called as what? Other services. Okay, now I am going to define these words for you, and accordingly probably you'll get to know that what are the different standards that we have to follow. Okay, now please understand. Okay, let's say guys that I have been given, I am doing, in my hand I have, let's say, the subject matter is historical financial statement. What is it that I have got? Historical financial statements. Historical, what do you mean by historical financial statements? Things which have already happened and all. Let's say if I am given financial statements of 31st March 2022 at this moment, so it's a historical thing. I mean things which have already happened, events which have already taken place. So if I have been given a historical financial statements to check upon, okay, and please understand, I give something called as reasonable assurance on it. I give something called as reasonable assurance on it. What is reasonable? I'll just try and explain it to you. Then this work, this type of service would be called as what? Audit. I am checking what? Historical financial statements. Okay, and upon checking historical financial statements, what is the kind of assurance that I am giving to the people? Reasonable. Is it absolute assurance? No. What is reasonable? I'll just tell you. So this type of work would be called as what? Audit. Okay, now please understand, what is reasonable assurance? Reasonable assurance means high level of assurance. High level of assurance, but not absolute. Because if I give an absolute assurance, guys, in audit, can we give 100% assurance? It would amount to giving a certificate, but I told you we will never give what? Certificate in case of audit. So please understand, we shall never give absolute assurance or 100% assurance in audit, but something we call as what? Reasonable assurance. What do you mean by reasonable assurance? This is also what? High level of assurance, but not an absolute assurance. So if I am checking the historical financial statements and I give reasonable assurance, this work would be called as what? Audit. And as a chartered accountant, guys, when you are doing the work of audit, you have to follow a standard which is called as standards on audit. Are you all okay with this? Okay, now second part, let's say you have historical financial statement with you. Okay, but then in this historical financial statement, you are not checking things in as much as details as you do in audit. Okay, you are only giving, let's say, you are only giving here limited or let's say moderate assurance. Okay, now what is limited or moderate assurance? It is a limited assurance but not as high as reasonable assurance. Okay, so we call this work as what? Review. Okay, now in layman's terms, guys, if I say, review is like younger brother of audit. Okay, in audit, do we check internal controls? Do we check their accounting systems and all? And then we check the transactions, everything, and then we give the opinion. Okay, and mostly it is done, let's say, towards the end of the financial year. But when I say review, we don't check internal controls and all here, but we just see whether, we just it's like an overview whether everything financial statements looks proper or not. We don't do an in-depth checking here. Okay, and let's say review mostly done in case of listed companies and all. If you must have read that, they have to submit the review reports every 3 months with, let's say, SEBI and all. Okay, so we do a review there. So please understand, review also involves some kind of assurance. We are giving some assurance to the users of financial statement, but what is the level of assurance in case of review? It is limited or moderate assurance. And then please understand, guys, if you as chartered accountant are doing the work of review also, then also institute has given certain standards for us to be followed. We call it as standards on review engagement. Are you all okay with this? Fine. Okay, next, the third scenario. Okay, let's say if it is other than historical financial statement, other than historical financial statement. Okay, in case of other than historical financial statement, that, so can you give some examples? What is other than historical financial statement? Not really. Absolutely. Projected financial statements, something which has not yet happened. Can projected financial statements be example of, other than historical financial statement? Okay, now please understand, things which have not yet happened, do you even think, can you give a certificate there? No. Can you even give reasonable assurance? If at all you are able to give reasonable assurance also on things which has not happened, you shouldn't be called as an auditor. Probably astrologer would be a better word for you, right? But then things which has not yet happened, please understand, okay, what kind of assurance are we only going to give here? Limited or moderate assurance. And this kind of work, what has happened, please understand, okay, in all this are nothing but, the assurance services. In all of this work, we are giving some form of assurance to the users of financial statement. Okay, when I say assurance, it means what? Your signature has a power. People are able to rely on it, right? So we are giving them an assurance. Okay, so in this type of work also we give an assurance, but then the institute was not able to come up with any word for it. Like we have audit here, we have review, so they named it as what? Assurance. Is audit also an assurance? Is review also an assurance? But then they couldn't find a word for here, specific word, so they have named it as what? Assurance. So even if you are doing some assurance work, what is assurance work? What is the subject matter? What is the subject matter other than something other than historical financial statement? What kind of assurance you are going to give here? Limited. So here also you have to follow something called as standards on assurance engagement. We call it as what? SAE. Standards on assurance engagement. Are you all okay with this? Okay, if I tell you guys, let's say if a company is coming up with an IPO or an FPO, okay, they come up with something called as prospectus. You had this chapter in company law at the intermediate level. Okay, so in prospectus also, if you are able to recall, there is a provision that projected financials of 5 years needs to be given. If somebody is coming up with a prospectus, because on the basis of that, prospective investor would decide whether they want to invest in the shares of this company or not. So that is a projection. So in any sort of projection, we will not give reasonable assurance, but we are only going to give what kind of assurance? Limited or moderate assurance. Again, what is limited and moderate assurance? It's a moderate level of assurance, not as high as reasonable assurance. What is reasonable assurance? It's a high level of assurance, but not, when I say it's not 100% assurance. Okay, are you all okay with this? And then there is something called as other services. Okay, like for example, my client tells me to do the consolidation of the financial statements, holding and subsidiary. So I make a financial statements for them. My client is telling me to review the debtors that they have. My client is asking me to represent the case in the income tax department. So these are the services which I can render, yes or no? But then please understand, these are the services wherein you give no assurance. There is no assurance involved. And this type of service we call it as We call it as what? Related services. Okay, and when you're giving related services to your client, you have to follow, okay, I think yeah, you have to follow a standard which we call it as SRS, standards on related services. Are you all okay with this? Okay, so these are the different standards, guys, that you have to follow. And please remember, these four standards, standards on auditing. What is SRE? Standards on review engagement. What is SAE? Standards on assurance engagement. And SRS, standards on related services. These four standards collectively are called as, these four standards collectively will be called as what? Engagement standards. Are you all okay with this? Fine. But see the name of the chapter, guys. What is the name of the chapter? It says I have just taught you what engagement standard means. But what about the quality control? Okay, there is one more standard. Okay, now please understand what happens is, now institute tells us that you give any of these services. If you are providing any of these services, you have to ensure that you maintain topmost quality when delivering these services. Okay, so along with these standards, if you are doing the work of audit or review, or it be assurance, anything, you also have to follow these standards for quality. And at present we have only one standard with respect to quality, which we call it as SQC 1. We call it as what standard? This is nothing but a quality control standard. Okay, so please make it very clear, guys. When I say engagement standards, it would only mean how many standards? 4 standards collectively. We call it as engagement standard. Why is the word engagement used? Engagement is nothing but the kind of work that you are doing. So if you are doing the work of audit, which standard are you going to follow? Standards on auditing. So that is why the name is what? Engagement standard. Engagement simply means the kind of work that you are doing. Okay, so along with the engagement standards, we have to follow what? Quality standards. And how many quality standards we have? At present we have only SQC 1 in our course. Are you all okay with this? Now, so let's just quickly read the 4 topics that I have just taught you. Okay, I have mentioned it in the notes also. So what is standard on auditing, guys? Will be quick here. It says these standards are to be applied in audit. Audit of what? What was the subject matter? Historical financial statements. Okay, and the auditor's opinion enhances the credibility of the financial statements by providing what kind of assurance? High but not absolute level. So what do we call this type of assurance? If you want, you can write also. We call it as what assurance? Reasonable assurance. Are you all okay with this? So next is standard on review engagement. Again, in layman's terms, what did I tell you? Consider review as younger brother of audit. You are not going to check things in as much details as you did it in audit. Okay, so here it says these standards are to be applied in the review of, again, what is the subject matter? Historical financial information. Okay, while a review involves application of audit skills, techniques and gathering evidence, it does not involve, you are not going to check on the internal controls and accounting system and all. But are we required to check upon the internal controls in case of audit? Did I not tell you in audit process also understand the entity and its internal controls? But this is not required here. Okay, so can I say the level of assurance that you give in review is correspondingly less as compared to audit? Yes, so the level of assurance provided in a review report is correspondingly less than given in audit report. What is the level of assurance that you give? If you want, you can write here. Limited. Is this clear? Okay, then we have standards on assurance engagement. Okay, what is the subject matter here? Can I say other than what? Like prospective financial information or so. What is the assurance that again you are going to give? It can be either, what is the other name of limited? Moderate. Okay, and when I say, guys, standards on related services, are we giving any assurance here? We are not giving any assurance to the users. We are just doing the compilation work. When is it that a CA is able to give assurance? when he signs, when he gives an opinion, so he is basically giving an assurance to the users of the subject matter. Okay, but then here we have no assurance. So what could be the examples of the work? Let's say it says compilation engagements. Let's say you do the consolidation of the holding subsidiary. Then let's say the company has prepared its financial statements in Tally. They don't know how to convert it into Schedule 3 format. So they ask you to do it. Can you do it? Yes. But then you are not going to give any assurance on it. You do it on behalf of the management, you charge fees. So this will be covered under what? Related service. And even if you are giving any related services, you have to comply with the standards, which we call it as what? SRS. Okay, but guys, apart from these 4 standards, I told you these 4 standards, please mark this word, they are collectively called as what? All these 4 standards collectively, it's an umbrella term, it is called as engagement standard. Okay, but in addition to this, did I not tell you that you also have to comply with what? SQC are to be applied for all services covered by engagement standard. So SQC, basically we will discuss it in detail, but yes, this is what kind of standard, guys? Quality control. Clear? Fine. Okay, now the good part is, at your final level also, okay, we only have to cover standard on auditing in our course, and the only aspect that we have to cover is SQC1. You don't have to cover SRE, SAE and SRS. But then you need to know the basics, right? You need to understand the difference between the standards. So we'll be covering in our syllabus all the standards on auditing. Okay, and if you can see in the next page that you have, I have given a list of all the standards that is there in our course. So if you are able to recall, we have 200 series, we have 300, 400 series, 500 series, 600, 700 series is also again about audit report. Okay, and also the good part is in standards on auditing also, all standards are not in your course. The 800 series is not there in your syllabus. I have mentioned it in the this also, excluded from final syllabus. So you have to ideally cover basically from 200. Your coverage is going to be from SA 200 till basically SA, the last standard that you have to cover is 720. Is this clear, everyone? Yes. Okay. Now, ideally, I shall be now starting with the standards, but I told you guys that before I start with the standards, again, I would like all of you to go to the chapter of fundamentals. Okay, we will just cover few more words very quickly so that you are able to understand things. Okay, so I am on page 4, Roman 4 of the fundamentals part, and you see the point. It says some important terms used in standards. Okay, now the first word that I'm going to take up is applicable FRF, financial reporting framework. Though we have discussed this word, but in layman's terms, again, if I say, can I say it in this way? FRF is basically the set of rules which management should be following when they are preparing the financial statement. I have told you it is the responsibility of the management and those charged with governance to prepare the financial statement. So who should be ideally following the FRF? Management, right? But again, what is FRF here? Please understand, it says, okay, applicable financial reporting framework. It says the financial reporting framework adopted by whom? Management, and where appropriate, the word is what? So I'll just quickly discuss these two words also, but let us finish the definition first. It says financial reporting framework adopted by management and where appropriate, those charged with governance in the preparation and presentation of financial statement. Why will the management use this FRF? For the purpose of what? Preparation and presentation of financial statements. Okay, that is acceptable in view of the nature of the entity and the objective of the financial statements, or that is required by law or regulation. So please understand, guys, what is FRF? You just remember the word. It's a framework which is adopted by whom? Management as well as TCWG. And this framework is dependent either, please understand, either it will be as per the law or it will be on the basis of, please understand, objective of financial statement. Now what does this mean? I'll I'll be quick here, but yeah, I want you to understand. See, FRF generally, if it is a company, please understand, if it is a company, is it not the case that the FRF has been prescribed by the law? You all know, if it's a company, schedule 3, okay, then Ind AS, AS they have to follow, okay. So the FRF is, it is actually acceptable in, it is required by the law basically. But then please understand, you all have gone through the Partnership Act also in your foundation or maybe in your college also. Did you come across any instance while covering financial, the Partnership Act, as to how the partnership firm should maintain their books of accounts? The Partnership Act is silent as to how the partnership firms should maintain their books of accounts, okay. So now let's say, okay, you are a partnership firm, okay, and your turnover is 5 crore rupees. So basically you are going to get your financial statements audited, okay, under which act? Does Partnership Act say anything about audit? No. So you shall be, falling under the purview of audit because of Income Tax Act, because your turnover, let's say, is more than 1 crore rupee under section 44 AB, okay. So now, so you are going to make financials, and you have, let's say, asked me to do the audit, okay. So I'll just, let's say, put it in this way. Before I do the audit, I'll ask you, okay, so let's say, how have you charged the depreciation? What method have you used for depreciation? So sir, we are partnership firm, we can use any method we want. Our Partnership Act is silent about it, okay. So sir, I don't like the word WDV, so I have used SLM. This is what he says, so which is very much what relevant. But then I ask him, see, what is the purpose? Why have you even prepared the financial statements? So he gave me 2 reasons. So we are partnership firm. I always have a doubt on my partner. So partnership firm, if we have our accounts properly maintained, so there is a trust, sharing and all, everything is proper. And what is the second reason? Sir, Modi ji, we have to give our financial statements to the government, okay. So I told him, which department? So he tells income tax. So I then ask him one simple question. See, ultimately you are preparing your financial statements to be submitted to the income tax, or let's say your returns, everything. And income tax, as per income tax, what method of depreciation do they follow? WDV. So why did you even prepare your financials on the basis of SLM? If you have prepared it on the basis of SLM, again when I am filing your return and all, what has to be done? Will I add back the depreciation as per SLM and then again calculate as per WDV and then again deduct as per WDV? Yes or no? So there are unnecessary things here involved. So what I am trying to tell you is, it says your FRF should be either as per law, but let's say in case of partnership firm it was silent, so it should be on the basis of what? So objective is to submit the financials where? To the income tax. So follow WDV. You got my point? So if somebody tells you that FRF is always prescribed, it is as per the requirement of the law, the answer is wrong. It also depends on the objective of the financial statement. Are you all okay with this? So if you want to write, guys, just write the examples. What can be the examples here? Schedule 3, Ind AS, AS, IFRS, US GAAP. Are these examples of FRF? Fine, great, okay. Now I told you this, let's understand these 2 words, guys, management as well as whom? TCWG, okay. Now perhaps I'm not sure what you have learned at the intermediate level, but yes, I believe it's better if I just make you, go through the concepts quickly, okay. So let's say there is a company, guys, okay. Let me take the case of, let's say, have you heard about Aditya Birla Group? Yes, who is the chairman? Who is the chairman? Have you heard about Kumar Mangalam Birla? He's a chartered accountant, okay. He's the chairman of that company, okay. So let's say we have Kumar Mangalam also, okay, Birla. Now please understand, this is the Aditya Birla Group, and the chairperson or chairman is Kumar Mangalam Birla, and obviously he is not going to be alone, plus he will be having his own corporate level team, okay. Now please understand, under this Aditya Birla Group, they have around 120 companies in different parts of the world, okay. So let's say they have company 1, company 2, company 3, etc., company 4, and each of these companies will have their respective board of directors. Yes or no? Each company will have board of director. Yes. Who is this board of director actually going to report to? Kumar Mangalam Birla. Yes or no? So Kumar Mangalam Birla and his team members will be called as what? TCWG. And the board of directors of each of this company will be called as, okay, can I say it in this way, that the board of directors will be responsible for daily and day-to-day operational decision for C1. This board will be responsible for daily and day-to-day operations of C2. But this Kumar Mangalam Birla, he'll not be bothered about day-to-day operations. What kind of decisions is he going to take? Strategic. When I say strategic, which new business to enter into? Will this board be taking decision, or Kumar Mangalam Birla will be taking a decision? Which new business to enter into? What do you think? Who is going to take the Kumar Mangalam Birla? So they take strategic decisions. Which business is not doing well? Let's shut the business. So who is going to take this decision? Kumar Mangalam Birla. Where to invest most of the money of the company into which business? Decision will be taken by TCWG. Are you all okay? But then let's say for company C1, the responsibility for preparation and presentation of financial statements is of the board as well as Kumar Mangalam Birla. For each of the company, he shall also be held responsible. Are you all okay with this? Fine. So guys, can I say management of the company is mostly what? Board of directors, and TCWG is basically are the persons who have the responsibility to oversee the entire organization. And what kind of decision making do they take? Strategic. Okay, so let's just quickly read the point. The term management refers to, it says what? Persons with the executive responsibility for the conduct of entities operations. So daily operations of the company they undertake. Usually the board of directors are what? The management. And when I say TCWG, it says these are generally person, or see the word, organizations with responsibility for overseeing the strategic direction of the entity. Are you all okay with this? Okay, but then please be very careful again. See, if you read the definition very minutely, in the word management we have only what? Persons. But in the TCWG we have person as well as what? Organization. Now I'll just give you one example. Let's say, can it so happen that there is a holding company and it has got multiple subsidiaries? Yes, and each of this subsidiary will have a board of directors. So ultimately the board of directors are going to report now to whom? Holding company. So holding company is what? Organization. And will it be a TCWG? Yes. So TCWG can be a person also, it can be a company also. So that is why we have mentioned the word person or organization. But in case of management, it will mostly be always what? The board of directors, the persons who are actually responsible for the daily operations of a business. Are you all okay with this? Great. All right. Fine. Okay. Now, so were you all clear on these definitions while you were preparing for the exam? Okay, so generally what happens, we just tend to read it, and when it comes to standards part and all, I know the how the students take it up. So I'm just trying my best to make everything very clear to you, so that when you actually read audit subject, you find it interesting. I've seen students doing it at the last, and again, and the topic which I have taken first, this is mostly done by the students towards the end. They'll do professional ethics is easy, they'll do company audit first, they'll try to master in these two topics, and then standards on auditing part, they'll do it on a very selective basis. This is important or not, and then there are so many Telegram channels which will tell you that okay, these standards are important, this is not. We will try and standards, probably I proudly say that it is my forte, a strong point, and I'll try my best to make it very easy for you, and probably this 30 marks coverage that the standards has, you will be very comfortable in this. Okay, all right, let's move on to the next part. Misstatements we have already discussed. Okay, so the misstatement word which I had discussed earlier was a very layman's terms definition. I only told you that if there are mistakes in the financial statement, if there is omission of something, it will be called as what? Misstatement. But then let's understand now the technical definition, okay, which is very easy. Okay, now technical definition says, see, this is something which has been reported by management, and this is what it should have been as per FRF. If there is any difference between the two, it will be called as mistake. So what management has reported and what it should have been as per FRF, the difference between the two will be called as misstatement. Okay, so let's read the point. Misstatement means difference between the amount, classification, presentation or disclosure of a reported financial statement item. Of a reported means what management has given, and the amount, classification, presentation or disclosure that is required for the item to be in accordance with what? FRF. So if there is a difference between what management has reported and what it should have been as per FRF, it would be called as misstatement. But we have 4 words to cover, guys. Please understand: amount, classification, presentation and disclosure. Instead of writing 5 lakh rupees of furniture, I write 4 lakhs. Is there a difference in the amount? Okay. Classification, rather than let's say okay, I bought furniture, okay, rather than putting it in the furniture and fixtures, I have put it in the inventory. Wrong classification. Okay, rather than showing it as a capital expenditure, I have shown it as revenue. Presentation again is what? Wrong. Okay, let's say classification, presentation, I gave you the examples interchangeably. And let's say disclosure, there was a need to disclose about related party transaction. Related party transactions, if you must have done audit in office, the related party transactions, there is a schedule which is given into the notes of accounts as per AS 18. Okay, what is the Ind AS? 32, 22, 20, okay, 24. Okay, so yeah, all right. So so we have to give a disclosure of the same, and now let's say the management has not disclosed the same. So will it amount to misstatement? Yes. So misstatements can be because of the difference in what management has reported and what is required by the FRF. Difference in what? Amount, classification, presentation as well as disclosure. Is this clear? Very simple definition. Obviously, at the final level, you won't be asked to write a definition of misstatement, but yes, it is only for your understanding. Okay. Now coming to very important part, I am going to take up 2 important concepts: audit risk and risk of material misstatement. And if you understand the concepts well here, guys, okay, will be sorted with few of the chapters also. We have a chapter on risk assessment, okay, and internal controls. Okay, so let's understand the concept. Now, what is risk of material misstatement? Now, I just want you to ask you first, while you are doing the audit, do you assess risk of material misstatement? When you do the audit, do you consider risk of material misstatement? Okay, when do you consider it? Before you start the audit or after you start the audit? How? Go through the audit process again. I told you, appointment of auditor, then objective and scope of audit, understand the entity and internal controls, and then assess ROMMS. And according to the ROMMS, that the assessment of which you have made, we do our planning and then we start the audit. So can I say that ROMMS is assessed prior to the audit? Yes or no? I remember once this question was asked, and the students whose concept is not clear, I mean, they made mistakes here. So what is risk of material misstatement? Now, in simple words, if I say, it is a chance that there will be misstatements in the financial statement. When do you calculate or assess, not calculate, rather, when do you assess the ROMMS? It says the risk that financial statements are materially misstated. Please mark the word prior to audit. Are you all okay with this? Clear? Now, see, again, if I tell you guys that this risk of material misstatement, in any organization, will it be assessed? Yes or no? It will be assessed prior to you doing the audit. Okay. So it is generally assessed at 2 levels. One is called as financial statement level, and the second one is called as assertion level or account balance classification level. Okay, so what is this? Just understand, we'll be covering all this in the chapters in the detail. Okay, now when I say risk of material misstatement at the financial statement level, it means that let's put it in this way. Let's say if I feel that the going concern assumption, is it one of the fundamental accounting principles? I mean, this should be followed while preparing the financial statements. Let's say if I feel that the going concern is not appropriate, okay, and the management still has made the financials on the basis of accrual method, because if the going concern is not appropriate, they should be preparing the financials on realizable value. But let's say going concern is not appropriate and they have made the financials on the basis of accrual method only. Is it impacting many items of the financial statement? So this type of risk of material misstatement, we call it as what? at the financial statement level. That means it is affecting many assertions. Are you all okay with this? Let's say when I feel that the management of the company, the accounts department is not competent. This is a risk. Now, when they are not competent, probably there might be many things in the financial statements which might not be correct. So, this risk, is it a risk of material misstatement at individual level or at the entire financial statement level? Are you all okay with this? Now, when I say risk of material misstatement at the assertion level, let's first try and understand the meaning of the word assertion. Assertion simply means the facts given by the management, stated by the management in the financial statement. What is assertion? Facts. Okay. Now, if I give you a very layman's example again, let's say there is land and building amounting to how much? 5 lakhs. This is appearing in the financial statements of the company, balance sheet. Okay. Now, when management has mentioned land and building to the tune of 5 lakh rupees, it gives us various facts. Okay. The number one thing is that land and building exists. So the management wants to say that there is a land and building, and they also want to say, because they have mentioned it in their financial statement, they also want to convey that this belongs to them. So they are also conveying what? Ownership. And they also want to convey that the valuation of this is how much. So these are nothing but what? Assertions which management is trying to convey to us through the financial statements. And as an auditor, we check upon these assertions only. Did I not tell you how are you going to check the existence assertion? By doing what? Physical verification. How are you going to check the ownership assertion? By title deed. How are you going to check the valuation assertion? By going through the valuer certificate, etc. Are you all okay with this? So any item in the financial statement it's going to convey a lot of things to us. Okay. So when I say risk of material misstatement at the assertion level, it can be misstatement to any of these assertions. Are you all okay with this? If there is a misstatement in advertising expense with respect to the amount, will it be a ROMS at financial statement level or assertion level? Assertion level. If there is a misstatement with respect to advertisement, not with respect to amount but with respect to the classification, so is it a misstatement at the ROMS? Is it ROMS at the FS level or at the assertion level? Assertion. Are you all okay with this? Now, please understand. When I say ROMS at the assertion level, okay, I would like to come out, I would like to assess ROMS for each of the assertions. I mean, for each of the items of the financial statement. So when I assess ROMS, please understand, we shall be calculating it in this manner. ROMS is equal to inherent risk into something called as control risk. Now I am going to give you a very practical understanding of the topic. Okay, how are we going to assess the risk of material misstatement? So risk of material misstatement at the assertion level will comprise of two components. One is inherent risk and the other one is control risk. Okay. Now try and understand these two words. When I say inherent risk, okay, inherent risk means a risk which will be there, which is associated with the business. It will be there no matter what you do. And assuming that there are no controls, what would be the risk in the company? We call it as what? Inherent risk. Okay, now let me just give you one example. Let's consider two businesses. Let's say one is a jewelry business and the other one is a stationery business. Stationery means a company selling books and copies. Okay. Now, I just want to ask you, out of these two business, jewelry and stationery business, where do you think, chances of misstatements is more? I have not given you any details. Where do you think chances of misstatement will be more? In case of jewelry business or in case of stationery business? Jewelry. Why? What is the reason? What made you think so? Absolutely. Yes. One of the reasons, good reasons, is that in case of jewelry business, we'll be having a lot of price fluctuations. Whereas in the stationery business, the price is also stationary. It's fixed. Yes or no? What if the management of the company makes a sales of jewelry, shows it, the sales are recorded when the price of gold was lowest, and when they record purchases when the price of the gold was highest. In this way, they are trying to what? Bring down their profits and ultimately the taxation aspect. So there can be a lot of manipulation done. But in case of stationery, the price is also stationary, so the chances of misstatements in the financial statement is also less. Okay, but then please understand, let's say you are into jewelry business. Okay, you approach me, sir, will you do our audit? I say, I'll do your audit, no problem. I come to your office and I have not yet started the audit. I'm doing a casual discussion. So I tell you, sir, you are doing gold business in gold. Yes. So much of fluctuation, yes. And you do so many transactions in cash also, yes. So there will be a lot of misstatement in your financial statement. Sir, what you are saying? How can you say like this? There will be a lot of misstatements in the financial. We have controls in place. In order to ensure that the financial statements are not misstated, we have put internal controls in place. But then I tell you, please calm down, please calm down. I am just considering the inherent risk, assuming that there are no internal controls in your place. Assuming that there are no internal control at your place, what could be the chances of misstatements in the financial statement? So assuming that there are no internal controls in place, compare the jewelry business and the stationery business. Will the chances of misstatements in jewelry business be high? Yes, assuming that there are no internal controls. But again, the management tells me, sir, why are you even assuming? Because we have put in so much of money to implement internal controls. Why are you even considering the fact that let's assume that we don't have internal controls? So I tell them, see, I just want to understand the worst case scenario. What could possibly go wrong in your organization if there are no controls at all? And then I'll see that what controls you have actually implemented. I need to know the worst scenario, and then probably I'll see what controls you have implemented. Yes. So when I say, guys, inherent risk means the chances that there will be misstatement in the financial statement, considering that there are no internal controls. Are you all okay with this? Now, please understand. Okay. So let's say I feel you are my client and I feel, assuming that there are no internal controls in your organization, I feel that let's say, let's put it in this way, that that 60 okay, let me put it in this way, that 40% of the transactions will be misstated. I'm assuming that there are no internal controls, and then because there are no internal controls, 40% of the transactions will be what? Misstated. So this is what? Inherent risk. Okay. But then I tell you, sir, I feel 40% of your transactions are what? Misstated. Then you'll obviously be, you are going to be frustrated, and also what you are saying, we have controls, sir, we have got controls. Okay. So now I ask him about the controls. Sir, you see, you were worried about the price and all, so we have a security guard, and we ensure that security guard is there 24/7. He also has a gun, so there is no chance of theft and all, etc. We keep everything very securely. I say, good, there is no misappropriation. There is, I tell him, what if your employees, there's a small diamond, he puts a diamond in the pocket and goes at home? No, sir, this cannot happen. We check all the employees on daily basis. So I'm trying to just gain an understanding of the controls that they have. Okay. But then please understand, guys, no matter how much money the company invests in controls, okay, even if they try to have the best of the controls will never give you 100% assurance. See, you try to install best of the antivirus in your laptop, will they guarantee that there will be no virus? No. Are you all okay with this? You took the vaccine of COVID. Do they guarantee that no? So all controls controls will never give you 100% assurance. So whatever controls management has told me, I'll still tell them, see, I understand you have tried and implemented the best of the controls that you could have, but still, I feel that even after you have all your controls, 20% of the transactions will still be your controls will not be able to prevent the misstatements from happening. Okay, please understand, please be very careful about the language that I'm using. I feel that even if the management has got the controls, there will be 20% of the controls, 20% of the transactions which the management control will not be able to find or detect whether there are misstatements in it or not. So what is the control risk? What is the control risk? 20%. 20% is what? Control risk. And if I say, how effective is their control? 80% effective. So what is the risk? 20%. Are you all okay with this? Or let's say I put it in this way, that I feel that 75% of the times their control will be effective. So what is the control risk? What is the control risk? 25. This means what? That 25% of the times, or let's say 25% of the transactions will, their controls will not be able to detect the misstatements in it, because controls can never be 100% foolproof. So what is my control risk? 25. Now please understand. So what I'm going to do, I thought that inherent risk is how much? 40%. But then they say no, out of this 40%, 75% will be able to find out because our controls are 75% effective. But then I say 25% is your control risk. That means 25% of the transaction, again, the controls will not be able to figure it out whether there is a misstatement or not. So what is the control risk? 25%. And then what is the percentage of ROMS that might be there in the financial statements? It becomes how much? Are you able to understand? I mean, 40% out of 40%, 25% will not be able to be detected by the controls. So then I say the chance of misstatement in the financial statement is how much? 10%. Are you all okay with this? Yes. Now if I put it in very simple terms, let me just give you one simple example. Yeah, so guys, if you see that this is just an analogy, okay? So if you see here, we have, the, what is inherent risk? The raindrops that you can see, these are basically what? Inherent risk. I mean, there is no control. So these raindrops, it says misstatements likely to occur in the client's financial statement, assuming that there is no internal control. But to protect from the raindrops, the company says, no, we have a control. We have this umbrella. Umbrella is what? A control. But even if they open up the umbrella, you see there are few droplets which bypasses the umbrella. So these will be called as what? Control risk, because I told you no controls can be 100% foolproof. Okay, there will be some risk remaining after implementation of controls. We call it as what? Control risk. So it says misstatements that bypass controls are not detected by controls. Okay, and when we consider these two aspects, we get what? Risk of material misstatement. Are you all okay with this? Fine. So I'll come back to this diagram. Okay, but then now if I go back to this concept, okay, so I tell the management, sir, management, I feel that even after considering the controls that you have, I feel still there are 10% chance that your financial statements will be what? Materially misstated. Okay, then you say, sir, we are paying you fees, you are also going to do something. I tell yes. Okay, so how much misstatements are you going to find out? Sir, you are going to apply procedures. I say yes. You are going to try and obtain sufficient and appropriate audit evidence. I say yes. Then obviously you shall also be finding out some misstatements. Yes or no? Right. So I tell them yes. Okay. Now please understand. Having understood this concept, are you all clear with this, at least ROMS? Now what happens is, there is one more topic that I wish to discuss, which is about audit risk. Okay. Now first let me just read the definition. Both these concepts are interconnected. Okay, and a lot of conceptual understanding is required. It says, what is audit risk? What is audit risk? Audit risk is the risk that auditor expresses, what is the word? Inappropriate audit opinion. Auditor is expressing what? Inappropriate audit opinion when the financial statements are materially misstated. Okay, now please be very careful and answer my question. It says when the financial statements are materially misstated, but the auditor expresses an inappropriate audit opinion. So this simply means, now let me just put it in this way. What kind of opinion should the auditor have given when the financial statements were materially misstated? Either qualified or, let's say, adverse. Okay, now let's say instead of giving qualified, auditor gives unqualified. Instead of giving adverse, he gives unqualified, or let's say qualified. Will this amount to audit risk? Yes or no? What is the definition of audit risk? Audit risk is the risk that the auditor expresses what kind of opinion? Inappropriate audit opinion. When the financial statements are materially misstated. Are you all okay with this? Now, if you have understood this definition, answer this simple question. Auditor was supposed to give an unqualified opinion and he has ended up giving qualified opinion. Will this amount to audit risk? Is there a case of inappropriate audit opinion here? Yes. Okay. But then read the definition of audit risk again. What does it mean? It says audit risk is a risk that auditor expresses inappropriate audit opinion when the financial statements are materially misstated. Here, was the financial statement materially misstated? He was supposed to give what kind of opinion? Unqualified, but he gave. This is not going to amount to audit risk. Perhaps only a person of unsound mind will do it. That everything seems okay, still he gave what? Qualified. Or probably if he is high on some substance and all. Okay, he had a party last night and then he's still high, and then he was supposed to give unqualified opinion, but he gives what? Qualified opinion. So this would not amount to audit risk. This is something which is not feasible at all. I mean, only I told you an unsound mind person is going to do it. So please be very careful about the audit risk definition. Most of the students read only this part, that whenever the auditor expresses inappropriate opinion, it is what? Audit risk. But the definition is not complete. It says when the financial statements are materially misstated. So only in these case basically it will amount to what? Audit risk. Okay. Now in simple words, guys, in simple words again, can I put it in this way, that audit risk is the risk that the auditor expresses an inappropriate opinion. Now I want to ask you all, when you are the auditor, would you ever want that you express an inappropriate opinion? So in simple words, would you want your audit risk to be low or high? Would you want your audit risk, I mean the chance of you expressing inappropriate opinion, you would want it to be low? Yes. So now please understand what happens. I'm going to relate the two concepts. Okay, so what is audit risk? Please understand. Generally, practically I'm saying, okay, audit risk is always set. It is always set, okay, and it will be always set at what level? Low level. Okay, now audit risk is basically, contains two components. What are the two components? Audit risk is equal to risk of material misstatement into something called as detection risk. Please try and understand them very carefully, these words. Okay. Now, please, what I have told you, will the auditors of the company set the audit risk as low? Now, please understand. If my risk of material misstatement, which I have assessed here, okay, have I assessed? Yes. So, if my risk of material misstatement is high, please understand, and I want my audit risk to be low, what should be your detection risk? It should be low, yes or no? Ultimately, if I want my audit risk to be very low and risk of material misstatement is very high, so I would want my detection risk to be low. What is detection risk? Try and understand. See, I feel that there are risk of material misstatement to what extent? 10%. So obviously you are going to pay me fees, I am going to do my procedures, right? So what is detection risk? Detection risk is basically, even after auditor applies his procedures, some misstatements will not be detected. This is called as what? Detection risk. Did I not tell you that auditor will not check 100% of the things? Will detection risk be ever zero? No. So detection risk is the risk remaining even after the auditor applies his audit procedure. Now please understand, okay, please be very careful here. So what I'm trying to tell you is, if let's say this ROMMS is very high, which we have assessed, okay, now my question to all of you is, and if I want my detection risk to be, if I want my audit risk to be very low, so should I be taking my detection risk to a very low level? How do you think can I take my detection risk to a low level? So will I, if I want my detection risk to be very low, should I be doing more checking? Should I be covering more things? Then only my detection risk would be what? Low. Are you all okay with this? Now please again understand. So if I want my audit risk to be low, if risk of material misstatement is high, then obviously you will have to check in more things and bring that detection risk to a low level, so that overall audit risk comes to a low level. Are you all okay with this? What is detection risk, guys? Detection risk is nothing but, how much procedures are you going to apply, what all things are you going to check, so that we can ultimately bring the detection risk to a low level, and then ultimately the audit risk to a low level. Are you all okay with this? All right. Now again, if I say that the ROMMS, the company has amazing internal controls, ROMMS is very low, so even if then the detection risk is, let's say, medium, can we still say that overall audit risk is low? And what does it mean? Now will you have to do more extensive checking, or less checking will also be okay? Which situation will make you more happy? One or two? Two. So in any company where the ROMMS is low, and when will the ROMMS be low? In simple words, can I say if their internal controls are good, so their ROMMS will be low, then you'll be happy, because what is going to happen, you shall still be able to give correct audit opinion without checking much of the things. And fees that you are going to get, will it be same in both the cases? In India, we don't get fees on the basis of how much we work, rather the fees is fixed first, and then let's say the fees is fixed, and then you see that the ROM is so high in this company, and then rather than spending 5 days in the audit, you ended up spending 15 days in the audit. So ultimately you will not be very happy. More work will be required to be done by your end, from your end in this case. Are you all okay with this? All right, now can I put it in this way, guys, that okay, is ROMMS inversely proportional to detection risk? If ROMMS is more, detection risk is to be low. If ROMMS is low, higher detection risk is still acceptable, as far as our overall audit risk is what? Low. Overall audit risk will always be low. I mean, you will never set an audit risk very high. Is it clear? And this overall audit risk is set, at the partner level. The big persons, the big partners in the CA firm, they set the audit, risk, and then accordingly the entire work is done. Okay. Again, let me just put it in this way. Now, I just want to ask you one thing. Is ROMMS in the hands of auditor to increase or decrease ROMMS? Yes or no? No. Detection risk, either to increase detection risk or decrease, is it in the hands of our auditor? Yes. Why? Because it totally depends on his nature, timing, and extent of audit procedure. Okay, so if I say if he does more audit procedure, the detection risk will be low. If he does less of audit procedure, the detection risk might be more. Everyone, is it clear? Okay, now putting in very simple layman's terms again. Okay, let me just just understand this chain of sequence. If internal controls in an organization is adequate, okay, risk of material misstatement will be low. That means reliability on financial statements will be more. Okay, so in this case, detection risk would be, you would be happy with what? Less detection risk. So this implies what? The nature, timing, and extent of audit procedure will also be low. But then still will now, so please understand, will you be able to give a correct audit opinion by checking less of the things? Your checking would not be that extensive, yes? So will you still be able to give a correct audit opinion? Yes. So can I say now, please tell me this, will the efficiency of my audit here go up or down? Will this audit be more efficient? Will I be able to do things in less amount of time? So will this audit be more efficient? Yes. On the other hand, if I say internal controls are not adequate, okay, let's say, so probably then ROMMS would be high, and when ROMMS is high, your detection risk needs to be, I made a mistake here, okay, so ROMMS is low, then higher detection risk is also acceptable. Okay, I made a mistake. Okay, so ROMMS is high, you need to bring down your, how can this be brought down? Nature, timing, and extent of audit procedure. You have to check a lot of things. I mean, checking extent will increase. You'll check a lot of things. So obviously now you are going to come up with a correct audit opinion, but then this is going to impact the audit efficiency, and your efficiency will be what? Less, because things which could have been completed in 5 days of time, you will be now taking, let's say, 10 or 15 days of time to complete. Are you all okay with this? So okay, now are you able to relate the relation between ROMMS and detection risk? Yes. Will there be inverse relationship? Is this clear to everyone? Okay, again let me ask you one question. Is ROMMS in the hands of auditor? No. So okay, is it in the hands of management completely? Partial, because inherent risk is something which is associated with the business. Fine. Okay, now okay, but detection risk, don't you think it is totally in the hands of the auditor? Okay, it is up to him. Depending on the risk, he is going to increase or decrease the nature, timing and extent of his audit procedure. Are you all okay with this? So let us quickly now, if you have understood the concept, let us quickly now go through this part. It says audit risk. What is audit risk? It is a function of ROMS and detection risk. What is ROMS? We have already understood. ROMS is equal to what? Inherent risk into control risk. Okay, and what is audit risk going to be? Into detection risk. Okay, so what is detection risk? Let us understand. You just read this part. It says, after assessment of risk of material misstatement, auditor determines that the nature, timing and extent of audit procedure to be performed. If still auditor feels that there may be chances that despite of his audit procedure, some misstatements may remain undiscovered. Despite of his audit procedure, some misstatements may remain undiscovered. It is known as what? Clear? Fine. Okay, so detection risk is totally in the hands of the auditor. All right. Now, what is control risk, guys? Okay, just read this part. Even after assessment of controls as designed, implemented and maintained by management to prevent misstatement, if the auditor feels that still misstatement can be there, that means even after controls, if there is a misstatement, it would be known as what? Control risk. And what is inherent risk? Please read the point again. It says, if we assume in an entity under audit there is no internal control, the risk of fraud or error for each of the item of balance sheet P&L is called as inherent risk. It says risk of fraud or error. Do you remember that misstatement can either be because of what? Fraud or error. So it simply means the chance of misstatement in the financial statement, assuming that there is no system of internal controls. Is this clear? Fine. Okay. So if you have understood this concept, okay, we have the word assertions. What did I tell you? What does assertion mean? Facts. Who gives this facts? Facts or representations made by management. Okay, in the financial statements itself. Okay. All right. Now, if you have understood this part, let me just go back to the diagram here. Okay. So I told you that, see, if you see these droplets, these are what? Control risk. Okay. Risk which bypasses the control. Okay. And now I told you, if you combine these two, okay, ultimately this is what? Risk of material misstatement. Okay. Now, out of the risk of material misstatement, 10% that we have, let's say, the auditor will do some of his procedures, and then these risks, will be called as what? Audit risk. This umbrella again is what? The nature, timing and extent of audit procedures. Are you all okay with this? So going back to my example here, how much ROMS did we discuss here, guys? 10. Now let's say, okay, ROMS is 10. Now client asked me, sir, what do you think? How much ROMS will your procedures be able to detect? Okay, so let's say I tell him, okay, sir, even I'll not be able to check 100% of the things and all. So, but then I feel that, let's say my procedures will be able to detect, let's say, 70% of your misstatements. My procedures will be able to detect how much? 70%. So what is the percentage that I'll not be able to detect? 30. So what is the detection risk? So what will be the overall audit risk? 10% was the entire misstatements, and out of this 10%, 30% is something which I'll not be able to detect, and because of which I might give a wrong opinion. So 3% is going to be my audit risk. If the audit risk percentage is very high, guys, generally it is set, okay, then accordingly you shall increase the nature, timing and extent of your audit procedure. Try to bring down the detection risk as much as possible. Are you clear with these terms? And if you have understood the concept, okay, just check volume number 1, okay, index. If you see, we have an entire chapter here, chapter number 3, risk assessment and internal controls. We have an entire chapter. So if you have understood the concept here, the chapter will be able to now do it very quickly. Are you fine with this? Fine. So these are few terms that I wanted to discuss, guys, before I can take up any concept, any standard on auditing. Okay. All right, guys. So now we are good to go with the standards. We shall be starting with our first standard, but before I start and take up essay 200, I would like all of you to go to this list of standards that we have. Okay, I think it is on page, on your first chapter itself, page 1.2. Yes. Okay, so if you can see the list, guys, we have different series of standards. 100 and from 100 to 199, it is basically introductory matters which has not been notified yet, so good for you. Okay, second is 200 to 299, which talks about the general principles and responsibilities of auditors. 300 to 499 again is going to be about risk assessment. Risk assessment, when I say risk assessment in audit, it would mean ROMS. Okay, then audit evidence, entire 500 series is with respect to audit evidence. 600 is when you as an auditor using the work of others. It can be internal auditor, it can be some external experts, etc. And then 700 series is all about reporting. Okay, so this is how the standards have been classified. Okay, you don't have to remember the classification, but yes, we shall be now first starting with essay 200. And obviously you all know this at the intermediate level also, you know how you have to cover up a standard. You have to remember the name also as well as the number also. Okay, so let's start with essay 200 first. Okay, now when I talk about essay 200, if you see the name of the standard, it's a huge name: overall objectives of the independent auditor. Okay, this is on which page number? Yeah, 1.7. Okay, so overall objectives of the independent auditor and the conduct of audit in accordance with standards on auditing. Okay, one more thing before I move ahead. The standards on auditing are issued by ICAI, and there is something called as guidance note also. Have you come across the word? Okay, so please remember that standards on auditing are mandatory to be followed, and guidance note are only recommendatory in nature. Okay, again, when I say, guys, okay, you have this topic here in your engagement standards topic. If you can see, we have a point statements, and it's on page 1.5. Yes, so when I say statements are nothing but standards, and always remember that standards are mandatory to be followed. Okay, and when I say guidance notes, guys, it is what? Okay, and please remember, why are they saying the word statement? Okay, please understand this. Auditing statements, auditing standards is also mandatory to be followed. Who is going to follow it, auditor or the management? Sorry, I called it wrong. I'm not talking about standards on auditing, it is accounting standards. Sorry, AS, sorry. Okay, so AS is to be followed by whom? Management. So following AS is also compulsory, and following the standards on auditing is followed by auditor, it is also mandatory. Okay, and when I say guidance note again can be on accounting matters as well as on auditing matters. Okay, so guidance note is like, it's recommendatory in nature. ICAI comes up with guidance note on issues which the members might face difficulty in. Okay, but then just remember one thing, guys, that some guidance note are compulsory in nature. Okay, there are few guidance notes. See point number 4, which the council has specifically stated that they should be considered as mandatory. Like, for example, a good example can be guidance note on independence. Guidance note on independence of auditor. This is a guidance note which is probably mandatory to be followed. Fine. Anyway, so not very important, but yes, I just wanted to again brush your concept with respect to guidance note on standards. Okay, now let's finally start with essay 200. So 200, it says overall objectives of independent auditor. There are two parts in the name: overall objectives of the independent auditor, and secondly it says the conduct of audit in accordance with what? Standards on auditing. So all of you know this already. What is the objective of auditor? To express an opinion on the financial statement. And what kind of opinion, what kind of assurance he gives? Yeah, he gives reasonable assurance that the financial statements are giving true and fair view. And when can I say that the financial statements are giving true and fair view? Are not misstated, or they are prepared as per the applicable FRF. Okay, so let's quickly go through the objectives of independent auditor. It says to obtain reasonable assurance. Do you understand the word reasonable assurance now? It's high level of assurance but not absolute. Okay, so to obtain reasonable assurance whether the financial statement as a whole are free from material misstatement. and you all know misstatement can happen either due to fraud or error, thereby enabling the auditor to express an opinion whether the financial statements are prepared as per applicable financial reporting framework. So he gives an opinion, and do you think he gives a verbal opinion or he comes up with an audit report, right? So, and to report on the financial statement and communicate as required by the standards on auditing. So what is the objective? Number one, to obtain reasonable assurance that financial statements have been prepared as per FRF, and thereby the auditor is going to express an opinion whether the financial statements, okay, whether they have been prepared as per FRF, whether it is giving true and fair view or not. And secondly, at the same time, he has to report. It is only through the report that communication of his opinion can take place. Okay, so not very important. Yes, done. Okay. Now, yeah, what are the important part? What are the requirements of SA 200? Okay, what is the requirement of SA 200? So in all, guys, please remember, we have to cover 5 requirements of SA 200. One is ethical requirement, second one is professional skepticism, third is professional judgment, fourth is sufficient and appropriate audit evidence, and finally fifth one is conduct of audit in accordance with standards on auditing. So there are only 2 topics that you have to primarily cover in this particular standard. One is overall objective, and second, the requirements of this standard. How many requirements do we have? 5. Okay, so the first requirement that I'm going to take up is ethical requirements. Okay, now this basically means the auditor is subject to relevant ethical requirements, including those pertaining to independence. When I say ethical requirements, what does it mean, guys? It means the code of conduct issued by ICI. Okay, so relevant ethical requirements ordinarily complies the code of ethics issued by ICI. So code of ethics, we are going to cover it separately. Also, we have a chapter on professional ethics. Okay, but then when I say ethical requirements, you have to remember these 5 fundamental principles with respect to ethical requirements. What are the 5 fundamental principles? Number 1 is integrity, objectivity, professional competence and due care, confidentiality, and then we have something called as professional behavior. So under ethical requirements, we have further 5 requirements, 5 fundamental principles. What are the fundamental principles? Integrity. Now when I say integrity, it simply means, you know, the auditor should be honest. He should be, I can also write, straightforward. So when he is doing the audit work, he needs to be honest, he needs to be pretty straightforward, he needs to maintain his integrity. Okay, and the second word is objectivity. Objectivity means impartial. He will not be partial towards anything. He shall be unbiased. Unbiased. Okay, you can write the word unbiased, or you can also mention what? Impartial. Are you all okay with this? And please remember, guys, see, it says ethical requirements. You know, the auditor is subject to relevant ethical requirements, including those what? Pertaining to independence. An auditor can only be independent when these 2 things are there. He has to maintain integrity as well as what? Objectivity. If he works unbiased manner, if he gives impartial consideration towards all the things, then only I can say that the auditor is what? Independent, right? So for the independence to happen, integrity and objectivity is must. Okay. The third requirement. See, when you go for an audit, it is our ethical requirement that we have to be competent. The team members that we send, they have to be competent. Okay, so that is why, you know, when I say professional competence, if you feel, guys, that once you become chartered accountant, your life will be, you know, very green and jolly and all, you are into such a profession that you will never have to part away with the books. Even if you are into practice, even if you are into employment, you have to keep yourself updated. Every now and then Modi ji comes up with a new law, amendments and all, you have to keep yourself updated. So I'll say professional competent, you shall be professionally competent only when you keep yourself what? Updated. So books and all, you always will have to study. Okay, we feel that once final exam is over, once we become CA, you know, life will be sorted, but then books and all the acts, you have to still be updated. So when I say professional competence and due care, it simply means you have to be what? In simple words, if I say, it means what? You have to be updated. Okay, then confidentiality. Okay, again, this is an ethical requirement that, see, during the course of audit, we shall come across so many things about our clients. So our ethical requirement says one of the principles is that we need to maintain confidentiality. I am not just going to go to any third party and disclose facts about my client. Okay, so as and when I'm doing the audit, I'll come across a lot of papers, lot of your things. So I need to maintain them as confidential. I need to meet the requirement of confidentiality. But there is one exception to this. Okay, so let's say if I am bound to disclose something as my professional obligation, then probably I'll have to do it. Okay, if income tax says that you have to write about all related party transaction and the name of all related persons, so I'm income tax is a third party, but this is my legal and professional duty, so I'm doing it. So then confidentiality clause will not be violated. Okay, or let's say if my client expressly permits me to disclose the information. I'll give you one example. Let's say you are my client and I find your internal controls to be really very amazing. Okay, and let's say that I have been called by ICI to give a seminar on internal controls. Okay, so I'll take your request, I'll seek for your permission, I'll tell you that because your controls are very good, I would like to quote it as an example in the seminar. Will you allow that? If the management allows, if the company is okay, no problem about it. Okay, so please remember, confidentiality means what? That during the course of audit, whatever information I'm going to come across of my client, I'm not going to disclose it to any third party. But there are two exceptions. If I am bound by any legal or professional duty, it's my legal or professional duty. And secondly, if the client expressly permits, then I'm okay. I'm not violating this confidentiality principle. Are you all okay with this? And the last part, what is the last ethical requirement? Last ethical requirement is professional behavior. That I would be very professional with my clients. It means not emotional. It simply means, okay, not emotional. Like for example, let's say there's a client of mine and I've been auditing. Let's say we are associated with the company for 5-6 years. Okay, let's say after COVID he comes to me, sir, you have been associated with us for so long, we have been regular in paying you the fees and all. I say, yes sir, because of COVID, because of the sales are not high, so sir, we request you to reduce the fees. So I tell, how can I reduce the fees? If you are paying me 30,000, you are asking me to now do the audit in 10,000. So what should then he tells me, I told him, no, it is not possible. Sir, you do one thing, you don't check the fixed assets inventory and all. Everything is okay, I'm assuring you. But sir, you just do it for 10,000. No. Sir, you do one thing, you don't even come to the office. You just send your articles, junior articles. Then 10,000 will be, it will be feasible for you. I say no. But he keeps on pestering me, requesting me. And then I finally say, okay, done. Then you only tell me very honestly, I was getting 30,000 for one particular assignment. Now he is offering me only 10,000. Will I do the job wholeheartedly? Somewhere or the other, I might compromise. Okay, so then that is why what happened here, I got emotionally attached to the client and agreed to his terms. But then we always needs to be, we have to be professional. I'm not saying you don't have, you have to have the humanity in you, but then I'm saying that emotional aspect, it shouldn't be there. You have to be professional. Are you all okay with this? So under the first requirement, guys, ethical requirements, what are the 5 principles? Again, number 1, integrity, objectivity, professional competence and due care, confidentiality, and finally we have professional behavior. Okay, then because this ethical requirement point, it says the auditor is subject to relevant ethical requirements, including those independence. Okay, so we are now going to cover some point with respect to independence. Okay, so when I say independence, please understand, independence comprises both independence of mind and independence in appearance. Now what does this mean? See, when I talk about independence, it's not just that you have to be independent as per law, but then you should appear to be independent in the eyes of third parties also. You should appear to be independent. Okay, now I just want to discuss one scenario. Let's say, can I accept the audit of a company in which my father is a director? No. Why? Because father is relative as per the definition of Companies Act 277. Okay, but then there's a friend of mine who runs a company, who has a big company. Can I be the auditor of this company? Yes. Why? As per law, there is no violation. But then please understand, I go to the friend's office for audit. I take 2 articles along with me. And then the moment I enter in his office, I straight away go to his cabin. We order pizza, we have fun, we watch IPL together and chit-chatting and all. 2-3 hours gone, articles are working. What will the employees of the company think? What will the employees think? Hey, what is this auditor? Is he ever going to give a qualified opinion? Even if my boss, I mean my friend, let's say, even if my boss has misstatements in the financial statement, they are such good friends. This chartered accountant is never going to give adverse or qualified opinion. So what has happened in the eyes of third party, even though as per law I am independent, but in the eyes of third party, am I independent here? No. So we should avoid all such things. I mean, when I say independence, it is independence both of mind as well as independence in what? Appearance. Independence in appearance means you have to appear independent, in simple words, in the eyes of third parties also. No person should be able to doubt on your independence aspect. Are you all clear with this? And I told you already, this independence, will be possible when you maintain integrity, when you work with what? Objectivity. And there is one more word, when you maintain the attitude of professional skepticism, which is our requirement number 2. So I told you very well that these 2 points are must for you to be independent. Done. So first requirement is over. Okay. So in the first requirement, what all things you have to remember? Just the 5 principles, 5 ethical requirements. Again, integrity, objectivity, professional competence and due care, confidentiality and professional behavior. Done. Okay. What is the second requirement? Second requirement means professional skepticism. Now, what is professional skepticism? Please understand it in this way. See, we are into such a reputed profession that, whatever document our client gives us or whatever information he conveys to us, it's not that okay, you have given me the balance sheet, I'll say, by looking at your face, I feel that you have committed some fraud. This is not how we look at things. We generally tend to believe what they have given to us. Okay, so what is professional skepticism? It is an attitude of the auditor where we shall not be doubting upon the things which management has provided us, but that doesn't mean that you'll take everything for granted. I mean, we have to be alert for all possible misstatements in the financial statement. So when I say professional skepticism, it is an attitude of the auditor which makes him, which warrants him to be vigilant. It warrants him to be alert for possible misstatements. It shouldn't happen that you are accepting everything. Hey, management is such a humble person, genuine person and all, but then they might take advantage of you. So what is professional skepticism? It is an attitude that includes a questioning mind. It means being alert to conditions which may indicate possible misstatement due to fraud. You have to be alert, you have to be vigilant. Okay, so please understand it. When I say in layman's terms, professional skepticism is a mindset where an auditor does not simply accept information or audit evidence at face value. Rather, the auditor applies a reasonably questioning mind, but that doesn't mean we are doubting everything that they are giving. It's just that we are remaining alert, we are being vigilant. It doesn't mean we have a suspicious attitude that whatever they give we'll doubt. No. Okay, so it should not be understood as suspicion of the auditor, but should be taken as vigilant attitude of the auditor. Are you all clear with this? All right. So okay, now please understand, guys. Okay, though these topics are more important from the intermediate perspective, but then when do you think your professional skepticism radar or antenna would be on? Can you give me some instances where you would be more alert? Let's say I'll give you one example. Let's say I ask management, do you prepare BRS? They say yes. I ask the accountant, do you prepare BRS? He says, what is BRS? Then there are contradictory evidences, yes or no. So my radar, my antenna of professional skepticism would now be what? On. I would be more alert. Yes. So there are some examples, which I feel, you have to understand. It says, for example, auditor should always be alert where when, audit evidence provided by the client contradicts other audit evidences obtained by auditor himself. So number 1 point is what? When you get the contradictory evidence. Okay, let's say they are only giving you photocopies, not giving you originals. So again, your professional skepticism antenna should be on. So it says when you have doubts on the reliability of documents, okay, then when you feel that there might be a possibility of fraud, okay, and then okay, this last 1 point. All right, the standards on auditing that we shall be covering, guys, okay, it will tell us about the procedures to be performed. Let's say, for example, SA 501, which you will be studying, will tell us as to what we have to do for inventory. But if there is a requirement, if you feel that you have to perform other procedures than those mentioned in standards on auditing, I mean, there is a need for additional audit procedures, then probably that area is typical, I mean, significant. So you have to be alert. Okay, so it says circumstances that suggest the need for audit procedures in addition to that is what mentioned in So I can call it as additional audit procedure. Okay, so this is a very basic question that may be asked, though it is an intermediate level question, that professional skepticism, when should you be alert? I mean, when would you exercise professional skepticism? Give certain examples of circumstances. So number one, contradictory evidence. Number one, when you have doubt about the reliability of evidence or documents or responses of management. Third, when there is a possibility of fraud. And fourth, when you have to perform some additional procedures in addition to what is mentioned in standards on auditing. Are you all okay with this? Fine. So this is second requirement. Third requirement again is a very important one, which probably in the entire audit we should be using. Okay. Now see what happens during the course of audit. Auditor will have to take a lot of decisions. Okay. Now, for example, which procedure to apply, the evidence that I have obtained, is it sufficient, appropriate or not? So he has to take a lot of decisions. Okay, so these decisions will be called as professional judgment. Okay, when I say professional judgment, please understand, let's say I am a senior chartered accountant having 10 years of experience, and there is one more new chartered accountant. He or she might feel that 3 procedures needs to be applied to obtain sufficient and appropriate audit evidence, but on the basis of my experience I feel only these 2 are sufficient. So I am not saying he is or she is incorrect or wrong there, or I am correct. I am not saying this. It is what? Matter of professional judgment. So when I say matter of professional judgment, can different people have different judgment? Yes. Okay. But then what I am trying to tell you is, you shall not be making or taking decisions haphazardly on the basis of your intuition. You toss a coin. Should I audit? Should I check this or not? If head comes, I'll check fixed assets. If no, I'll not. So this is not how you take decisions. Your decisions must be backed by 3 things. When I say professional judgment, it says your decision. It means application of E, K and T. When you take any decisions, it should be backed by your experience, your knowledge and whatever training you have received. So this is what professional judgment means. You are not going to take any decision, decision about any course of action randomly or haphazardly, but whatever decisions, if anything is asked about professional judgment, guys, don't forget to mention about these 3 words. That's it. So in simple words, you are going to make decisions about any action, any course of action on the basis of your what? Experience, knowledge and training. Now I want you to answer this. In the entire audit, where all can the professional judgment be used? Okay, selecting the samples, again matter of how many samples to be selected, matter of professional judgment. What audit procedures to be applied, matter of professional judgment. Whether the evidence is obtained is sufficient and appropriate, we don't have any concrete formula for it, right? So it is again a matter of professional judgment. Whether this item is material or not, how much audit risk should we accept, again it is a matter of professional judgment. So we have some examples. See, professional judgment is necessary in particular decisions regarding materiality, audit risk. What are the audit procedures that you have to perform? That means nature, timing and extent of audit procedure. Whether you have obtained sufficient and appropriate audit evidences or not. Whether your conclusions, whatever conclusions you draw, again it is what? Matter of professional judgment. So many things. I mean, by the end of when you are done with auditing, or let's say standards on auditing, you will be able to write so many instances wherein professional judgment is required. Every aspect professional judgment is required. Okay, so what are the 3 requirements of SA 200 that we have covered? What was the first requirement? Ethical requirement. Ethical requirement including what? Including independence. Okay, second is professional skepticism. Third is professional judgment. Please remember, this is professional judgment. I have seen students making mistake writing professional judgment here. We have professional behavior here. Don't interchange. I have seen students making this mistake. They write under ethical requirements 0.5, they'll write what? Professional judgment. This is professional behavior here. Okay. All right. Next is sufficient appropriate audit evidence. Okay, now this we have already covered, but then I told you that your opinion, whatever audit opinion you give, it should be backed by evidence. Yes or no? And how will you obtain evidence? By applying what? Procedures, right? So audit evidence is necessary to support auditor's opinion and report. Are you all okay with this? Again, if I tell you guys audit evidence, we have 2 words to cover. What are the words? Sufficient and appropriate. Okay, sufficient deals with what? Quantity. And when I say appropriate, it is what? Quality. So we are going to cover more about it in SA 500. But when I say quality, again guys, under quality also, we have 2 points to cover. One is reliability, though I'm going to cover it later, and the next one is what? Relevance. I'll just give you one example. Will you consider photocopies more reliable or originals? Original. So our reliability increases. That means what? Quality increases. Okay. Will you consider written evidence more reliable or verbal? Written. So this is basically reliability. But when I talk about relevance, okay, I'll just give you one example here. Okay, let's say you want to test. Do you remember the word assertion? Facts. Okay, so I want to check whether the land and building is actually of 5 lakh rupees, and for this I do a physical verification. So will physical verification give me evidence with respect to value? No. So was this evidence, whatever evidence I obtained from this, was it even relevant here? No, because what am I trying to test here? The not the existence, but what? Valuation. So what I'm trying to tell you is the quality of audit evidence. We have two factors to consider. One is reliability, and the second one is what? The assertion that you are trying to test. It should be, the procedures that you apply should be relevant to the assertion that you are trying to test. Okay. Anyway, so we have 2 points here: quantity and quality. And then under quality, what did I tell you? What are the two words? We have reliability and relevance. Don't worry, this is something which we are going to cover in essay 500. Is this clear? Okay. And the last requirement, very simple: conduct of an audit in accordance with what? So whenever you are, say 200, essay 200 says when you are doing the audit, the standards on auditing needs to be followed. Okay. All right. But then let me just tell you this, guys, that are you supposed to comply with all the standards on auditing when you are auditing? The answer is no. Only those standards which are relevant to your audit. Okay. So it says compliance with standards which are, what is the word? Relevant. Are you all okay with this? Now, okay. Let's say, let me just give you one example. Let's say there is one standard 510 on opening balances. Okay. But I have been auditing this entity for last 3 years. So I'm not much worried about the opening balances. So 510 will not be relevant to my audit. Are you all okay with this? Sometimes, guys, it might so happen, please understand. Sometimes it might so happen that, let's say there is one standard 501. Okay. Probably you'll not be able to recall all the standards. 501 is about audit evidence with respect to 3 things: inventory, okay, litigation and claims, and segment reporting. Okay, let's say I don't have inventory, so but then there are a lot of litigation and claims. So can I say 501 will be fully applicable or partially? So can I say only relevant portions of the standard will be applicable? Okay, so please remember, you have to comply with which standards on auditing which are relevant to your auditing. And please understand this here. Yeah, the auditor shall comply with all standards which are, I'm marking the word, which are relevant to the audit. An essay is relevant to the audit when the circumstances addressed by the essay exist. Okay. And I just wanted to cover one more point. Yeah. Okay. Again, let me just put it in this way. So in the standard which is relevant to the audit, it might so happen, I gave you the extra example, that it might so happen that the entire standard is not relevant. So only, can I also say only relevant portion will be applicable? I mean, only he is to comply with the relevant portion of their standards. Are you all okay with this? So please remember two words: relevant standard on auditing, and in that relevant standard also the relevant portion he has to comply with. Okay. Okay. Now, for example, let's say the entire standard might not be relevant. For example, if there is no internal audit function in the organization, will SA 610 apply? The answer is no. Are you all okay with this? So this is what you have to cover in conduct of audit in accordance with standards on auditing. So the key thing to remember is, are standards on auditing mandatory? Yes. But are all standards on auditing mandatory to be complied with? No. Only the relevant standards on auditing, and in that relevant standards also you have to comply with the relevant portions of the standard. Okay. So with this, primarily essay 200 is over. Okay. Two things we had covered. One was what? Objective of the standard, and second is 5 requirements. Again, what are the 5 requirements? Ethical requirement, professional skepticism, professional Judgment sure or behavior? Judgment. Okay, judgment. Okay. Fourth is sufficient and appropriate audit evidence, and fifth is conduct of audit in accordance with standards on auditing. Are you all okay with this? Now, we are not yet done with the standard, but then again, we have a small topic to cover, which is again one of the favorite topics at the intermediate level, but then from the final levels perspective also you need to understand it. Okay, I have been telling you guys that when we do audit, we shall not be able to give absolute assurance, or rather let me put it in this way, can we ever reduce our audit risk to zero? There will be some element of audit risk. Why? Because we don't check 100% of the things, right? And there may be many other reasons. So there is one topic here, inherent limitations of audit. Okay, so because of these inherent limitations, you know, the auditor will not be able to reduce the audit risk to zero. Because of these inherent limitations of audit, you as an auditor will only be able to give reasonable assurance and not absolute assurance. Okay, and because of these inherent limitations of audit, you can never guarantee that the financial statements are free from material misstatements. Okay, so let's read the point. It says the auditor is not expected to and cannot reduce audit risk to zero, and therefore cannot obtain absolute assurance that financial statements are free from material misstatement due to fraud and error. Why? This is because there are inherent limitations to the subject of audit. When I say inherent limitations, this simply means limitations which will be there, which is there since the inception of the auditing profession, which cannot be separated. Okay, this is something which is attached inherently. Okay, so what are the inherent limitations of audit? I mean, these are limitations which we cannot overcome at any cost. So what are the inherent limitations of audit? Let us now understand. Okay, number one is nature of financial reporting. Now please understand this. Okay, we express an opinion on the financial statement, but in the financial statement, guys, there are a lot of judgments and estimates being used by management. For example, provision for doubtful debts. There is no formula to determine that, okay, these much amount of debtors will be doubtful. If management feels, they'll make provision for doubtful debts. It might so happen that in some particular year the profits are very high, consequently the taxes will be very high, so they make higher amount of provision for doubtful debts. You cannot, you cannot fight for it. There is no formula to find it out. So what I'm trying to tell you is, one of the reasons why we can only give reasonable assurance is that the financial statements prepared by management itself contains a lot of estimates and judgments. By whom? Management. Okay, so let's understand these two words here. It says nature of financial reporting. Preparation of financial statement involves judgment by the management, and you can also use the word what? Estimates. And obviously judgments and estimates are something which are very subjective in nature. There is no concrete formula. Even in fact, if there are three different directors, the three different directors might have three different opinions, because it is quite subjective in nature, right? So the financial statements involves judgment as well as what? Estimates, which are highly subjective. Now, for example, provision for doubtful debts, and this is the reason why we cannot vouch for the accuracy 100%. Okay, it says audit procedures are insufficient to find reasonableness of such judgments. We can do nothing about it. If management says no, we feel that this many debtors would be doubtful, we'll have to agree with it. Are you all okay with this? So this is the first inherent limitation of audit. Is this with respect to us auditors, or is it with respect to the preparation of financial statement? This is with respect to preparation of financial statement. Hence the heading is what? Nature of financial reporting. Is this clear? Second, this is a point which is relevant to us. I mean, nature of audit procedures. Okay. Now I would like you to read the last bullet first. It says most of the evidences on the basis of which auditor draws conclusions are what kind of? Are persuasive rather than conclusive. Now what happens? What does it mean? Let's say, I'll just give you one case. Let's say I was checking upon the sales of a company, okay, and then I found around 26th of March, I mean just towards the end of the financial statement, they have made a very huge sales transaction. Let's say it is pertaining to around let's say 2 crore rupees. The sales figure is how much? 2 crores. Obviously, and when I'm seeing the sales, I'm checking the sales, I feel maximum sales is, let's say 20 lakhs, 15 lakhs, 5 lakhs. These are the sales value, but this is a higher amount of how much? 2 crores. Obviously, my professional skepticism antenna will, be on here, and probably I'll ask basically for the documents and all. I like to, check upon the details. So I asked the manager to give me certain details. Okay, so I basically do a vouching. So what all things can I ask for? Okay, so let's say I asked, sales was done, so he produced the invoice. First thing that he gave me was what? Invoice. So he gave me the invoice, everything looked proper, but then I told him that uh, you know I told him that, sir, who has prepared this invoice? It is you has prepared the invoice. Okay, and you are giving it to me. I am not going to rely much on it. Okay, this is an internal document, not an external one. Okay, so okay, invoice, still it's a good document, but he gave it to me. I was not satisfied. So then he told me, sir, okay, let's do one thing, sir. I'll show you. Okay, let's say the name of the company is H Limited, and they had made a sales to, let's say, S Limited. So they told me, sir, okay, because this is an internal document, you are not relying much. Let me do one thing. S Limited had given us a purchase order. We have a copy of that. Purchase order is something which was not generated by us, but rather by the customer, S Limited. So this is something which is external. Then I say, okay, this seems to be relevant. But then I realized this S Limited is nothing but subsidiary of the H Limited. Then I tell the manager again, say, it is your subsidiary. You tell them whatever document to prepare, they are going to prepare it. Again, the management, okay, they were trying to convince me. So they told me, sir, okay, let's do one thing, sir. There is, you see the factory gate there? Yes, I tell yes. So there is a security guard here. Yeah. So he maintains security register. Okay, he has a security. He maintains a register there of all the trucks that come in and go out. So you can, sir, check the register there, and you will find that, outward movement of the goods truck. Okay, but then I tell him that, okay, even if there is a detail of that, yes, outward movement, how would I be able to verify what goods were actually sent? Sir, you are too much, sir. Okay, I'm going to give you one more thing. Sir, what? Sir, the truck, it is not, the transporter, he has given us what? A freight challan. Freight challan. You check this. Sir, this is a ton of quantity. This is, so I tell him again, how long are you associated with this transporter? So he deals with almost 90% of our inward and outward movement. So I tell him, if you ask him for one challan, will he not give you? He will definitely give it to you. So then he was kind of, very pissed, very, so then again, he showed me so many number of documents. Okay, then he got frustrated and told me, sir, do one thing, let's do one thing. There is a car there, let's sit in the car, go to the subsidiary, I'll show you that goods have been actually sent there. So I again tell him, what if I sit in the car, you take a longer route, meanwhile you send a direction to your company to send the goods, taking shortcut, and before I reach, the goods will be there. How will I be able to believe? Then he really got pissed. He told me, sir, you want to qualify the opinion, do it. You want to give a qualified opinion, give it. But then please imagine, please understand, they have given so much of documents. I know that this transaction is not genuine. H Limited has only done this transaction to show their growth. And probably, on 6th of April, let's say there will be a sales return. I know this. But will I be able to qualify my opinion? The answer is no. Why? Because if I qualify, people will ask me questions. What evidence do you have? I don't have any evidence. Management has so much of evidence that the transaction was genuine. So even if I know that this intention behind this transaction is not good, but I don't have any option but to go with an unqualified opinion, because they have so many supportings. So what I'm trying to tell you is, no matter whatever procedures you apply, you will only get what kind of evidence? You have to believe. There is no other choice rather than what? Conclusive. Okay, and let's say in this example only, let's say around in the month of July and all, after audit and all was done, everything was done. Next year perhaps, the manager, this person, we came across, and then we smiled. He told, sir, you remember that sales amount of 2 crores? I told, yes, I remember it very well. Sir, actually what happened, the subsidiary did not like the quality of our product, so they did a sales return. And he smiled. I can do nothing about it. You got my point. So why this is a limitation, because whatever procedures we apply, we only are able to get what kind of evidence, persuasive rather than conclusive. Okay, so this is one point here, but again, few more points with respect to our audit procedures. Okay, see, we are auditors, we are a very you know uh, into a very reputed professional. We don't have powers like that of a police officer or an investigating agency. We cannot go to the client's place and give him a surprise at 2 a.m. and then tell, surprise, we are here for an audit. We cannot do this. We are so genuine. I mean, we are into such a profession that we tell our clients in advance that tomorrow at 9:30 a.m. I am going to come, I am going to check this. Indirectly we are saying him to make necessary arrangements. Okay, all right. So we don't have what kind of power we don't have. Please understand, it says yeah, auditor has no legal power to search forcefully, or which means we which is necessary for investigation. So we only have verificatory powers, we don't have investigatory powers. Okay, and let's say I ask them for a bank statement. They make the statement by themselves, put in the seal and signature and sign like a manager. Will I go to the branch manager to check the authenticity of signature? Am I trained to do that? I am not a this forensic expert who in CID serial and all that you see, right? I'll believe it, right? So it says auditor is neither trained nor expected to be an expert in authentication of documents. So these are certain limitations, guys. Okay, that we shall only be able to gather what persuasive evidence rather than conclusive, plus we don't have investigatory powers, and then we cannot authenticate our documents also. So these are some limitations with respect to our audit procedure. Okay, all right. And the third point is, it says timeliness of financial reporting and balance between benefit and cost. Okay, so what does it mean? Now please understand, let's say I have been given the audit of Airtel, and in Airtel so many subscribers in India are there. Okay, and for each subscriber, let's say they do a transaction every month, recharge or postpaid, whatever. So many number of subscribers into 12. So I tell the audit the company that I want to bring in the vouchers, I want to check the vouchers. So they tell me, what you are saying, bring in the voucher, you have to come with us. It is in an entire building of vouchers. There is an entire building where we keep our vouchers. Okay, and then what is going to happen if I enter the building and if I start vouching all the vouchers? Perhaps by the time I am able to vouch all the vouchers of a particular year, I'll come out only after 7-8 years. And the basic purpose of audit will be defeated, because audited financial statements have to be adopted every year in what? General meeting, annual general meeting, right? So this is not possible. So what we do actually is, when we do the audit, we are going to resort to something called as test checking, or we also call it as what? Sampling. We shall never be able to check 100% of the things. Why? Because of the time factor. And also, obviously, see, we are working so hard to become chartereds. Are we going to do work for charity? We have to ensure a balance between what? Our benefit and cost. So let's say the client is only paying us 30,000 rupees fees, and then no, I have to do the audit properly. You spend 50 days in the audit. It is not going to be what? Cost effective for you, right? So the points, it says auditor resorts, see the point, auditor resorts to something called as what? Test checking, and not 100% checking. This means what? Auditor will resort to something called as sampling. And obviously he would devote his areas. Will he devote attention to all the areas equally, or will he be devoting his attention to those areas wherein there is more risk? Okay, so the auditor directs more efforts to which areas? Risky areas. Okay, so because of timeliness and because of he has to maintain a balance between cost and the benefit. These are the three inherent limitations of audit, guys, because of which the auditor is only able to give what kind of assurance? What is the word? He is not able to give actually absolute assurance, but he is only able to give reasonable assurance. Or let's say, can I put it in this way? The auditor is only able to, he cannot reduce audit risk to zero. Yes? Okay. So there is one point here. Because of the inherent limitations of audit, there is unavoidable risk that some material misstatements of the financial statements may not be detected, even though the audit is properly planned and performed in accordance with standards on auditing. Are you all okay with this? Now, again, I just want to ask you one thing. If, let's say guys, if you did the audit following the standards on auditing and then you submitted a report and all, but subsequently 3 months down the line a fraud was noticed in the company pertaining to the financial year which you have already audited, can people put blame on the auditor? Why?
Because we have given reasonable.
We have given reasonable assurance, but then please understand, this inherent limitations of audit will only be able to save you if you are able to prove that you complied with the standards on auditing. Hence, you always should be maintaining proper documentation when you do the audit, and proper documentation we have SA 230 for documentation. So it says, accordingly, subsequent discovery of material misstatement of the financial statements resulting from fraud or error does not by itself indicate a failure to conduct an audit in accordance with standards on auditing. So even if a fraud is detected subsequently, it would not mean that the auditor has not done the audit properly. Are you okay with this? Fine. So with this, now I can say my standard 200 is over. So in all guys, what you have to cover here is, please understand, you have to cover the objectives of this standard, the requirements, objectives of not this standard but rather objectives of auditor, requirements, and what is the third topic that we covered? Inherent limitations of audit. How many inherent limitations we have? 3. Nature of financial reporting, nature of audit procedure, timeliness, and cost benefit analysis. Okay, done. So 200 SA 200 is over. Okay, so the next standard that we shall be starting is SA 210. Okay, the name of the standard is agreeing the terms of audit engagement. Now, whenever you are studying a particular standard, guys, the first thing that you should consider is why this particular standard is in your syllabus, why a chartered accountant has to comply with this standard. Okay, so understand this. If you have this clarity of thought that, okay, why is this standard even there in our syllabus or required to be followed by CA, your 50% of your work will be done. So this standard is agreeing the terms of audit engagement. This simply means what? Again, we are a very into respectable profession. We would never want to have any argument or dispute or fight with our clients in future. So keeping in mind this aspect, we have this standard agreeing the terms of what? Audit engagement. So before you accept the audit engagement, you have to make everything very clear so that later on there is no case of any dispute. Are you all okay with this? So let's understand this. It says agreeing the terms of audit engagement. It says the objective of auditor is to accept or continue an audit engagement only when the basis upon which it is performed has been agreed through establishing the preconditions for an audit and confirming that there is a common understanding between the auditor and management, and wherever appropriate TCWG. So in simple words, guys, please understand, you are only going to accept an audit. Acceptance of audit is you are only going to accept an audit when there are two things present. Number one is something called as what? Preconditions to an audit. And secondly, when this is present, there has to be what? Something called as common understanding. Common understanding between whom? Between the auditor and the auditee, or let's say the client. Okay, so you are going to accept an audit. This standard says that you as an auditor are going to accept an audit only when there is two things present. One is preconditions to an audit, and the second one is what? Common understanding. Again, common understanding is between the auditor and the auditee, or let's say the client. Are you all okay with this? Now, what do you mean by preconditions to an audit? Okay, I'll put it in very simple terms and explain it to you. Let's say you have approached me. Okay, so I first ask you, who are you? I mean, what entity are you? You say, sir, we are a company. So I ask you, how you have prepared the financial statement? Sir, we don't know. I mean, we have just prepared the financial statements in Tally, and there is something called as AS, Ind AS, Schedule 3, which most of the chartered accountants even don't understand correctly. So we also don't know. So sir, we have come to you so that you make our financials as per Schedule 3 and audit it. So if this is the approach of the client, okay, you shall never accept their work. You are going to say them bye bye then and there. Why? Because this is one precondition that the client should have an understanding of FRF. So when I say preconditions to an audit, what all things will be there? I'll just give you more examples. Let's say, okay, now on the contrary, if say there is one client of us prospective client, he comes to us, I again ask him, who are you? He says, we are a company. How have you made your financials? Sir, what are you even asking? We are a company. Can we even slightly make our financial statements as per our wish? No, I have followed schedule 3, I have understood Ind AS, AS and everything I have complied with. Now you have to do the audit. This is what you have to look in for a client. Okay, if they first precondition, before even you think of accepting the audit, you have to see whether, you know, the precondition, it says determine whether the financial reporting framework to be applied in preparation of financial statement is what? Acceptable. Number one, you need to see whether management, whatever FRF they have applied, whether it is acceptable or not. This is a precondition. And secondly, you need to obtain an agreement of management that it acknowledges and understands its responsibility. You need to obtain a agreement, or let's say commitment from the management that they understand and acknowledges the responsibilities for three things. What are the three things? Number one, see, what is the first precondition, guys? We just ask them whether they have an understanding of their FRF. Secondly, you know, I would ask management to acknowledge and agree for their three basic responsibilities. What are the three basic responsibilities? That, you know, for the preparation of financial statements, that they are responsible for preparing the financial statements. And how? In accordance with FRF. They shall prepare the financial statements. Second, they are the ones who are responsible for implementing, for designing, maintenance and implementation of what? Internal controls in the organization. So preparation of financial statement, then we have internal controls. And thirdly, when we are going to come for audit, you know, you are going to give us access to three things, to provide auditor with three things. When we go to the audit, you shall provide us with three things. Number one, access to all information that is relevant to the preparation of financial statements. So you are not just going to give us financial statement, but all documents. It will include vouchers, it would include invoices, all the underlying data you shall be providing us, all the documents, all the information which is relevant to what? Preparation of the financial statement. But apart from this, you shall also provide us for any additional information that we ask for. Sir, we can ask you for providing us the minutes of the board meetings. Minutes of the board meeting is not used for preparing the financial statement, but this is an additional information which may ask and you are going to provide us. Okay, so additional information that the auditor may ask. If you want, you can write the example here. What can be the additional information? Example: minutes of BM, board meeting. Okay, and the third thing, you know, you are going to give us unrestricted access to all your employees within the organization. Sir, why do you need access to our employees? I can ask them anything to gain evidence. And when I say unrestricted access to all the employees, it would not be limited to only the finance and accounting department employees. You will have to give me access to go and ask your marketing person also. I can go and talk to your HR also. Okay, so if these preconditions are present, guys, how many preconditions are there? In a way, two. Okay, if these two preconditions are present, then you may think of accepting the audit. Think of, you are not yet accepted. Why? Because again, there is one more thing that you have to agree upon. You have to come up with. That is what? Developing what? Common understanding. Let's say now I'll give you one example. If these things are present, but he tells you that, you know, I am telling him that I want 50,000 as fees. He tells 20,000. Will you accept the audit? So again, it's not just the preconditions, but along with preconditions, the common understanding also needs to be developed. Then only if these two things are available, then only you are going to accept the audit. But yes, if preconditions to an audit are present, can we think of actually accepting the audit? We only when there is what? Common understanding also. So again, guys, what are the preconditions? How many preconditions we have? Two. Number one, you have to see whether, you know, FRF used by the management is acceptable. Then management accepts its responsibility with respect to three things. What are the three things? Number one, preparation of the financial statements as per applicable FRF. Second, design, maintenance and implementation of internal controls. And thirdly, they are going to provide us access to three things. Number one, all information relevant to the preparation of any additional information. And thirdly, they are going to give us unrestricted access to all their employees. It's not restricted. It means I would be allowed to talk or inquire or interview any of your employees, be it from any department. Okay, these are the preconditions which has to be present. Are you all okay with this? Fine. Now again, I told you that Yeah. So I told you, see, it says if the preconditions for an audit are not present, will you even think of accepting the audit? So let's say they tell you, sir, okay, you know, we don't understand FRF and all, but rather let's say rather than we offering you 30,000 as fees, sir, we are offering you 50,000. So please accept. Will you accept? The answer is no. So the point says, if the preconditions for an audit are not present, the auditor shall discuss the matter with the management and auditor shall not accept the proposed audit engagement. Are you all okay with this? Now, but then I told you, see guys, for you to accept the audit, what is the second condition? That there has to be what? Common understanding. Now, this common understanding part, this means that, you know, the terms and conditions between the auditor and the auditee should be very clear. So this common understanding can be, you know, made in two ways. Okay, one is basically we can have an agreement sort of thing, the formal agreement and all that we make in the stamp paper, or the acceptable, more acceptable thing that is actually practiced worldwide is something called as AEL. AEL is called as audit engagement letter. Okay, who prepares the audit engagement letter? Auditor prepares it, and whom he gives it to? So can I write it at auditee? Yes. So this is more acceptable, guys. Okay, so common understanding between the auditor and the auditee either can be developed through the formal agreements or through just a letter. That letter is called as what? Audit engagement letter. Okay, now we shall be following, because I told you this is more popular, we shall be going with the topic of audit engagement letter. So what is audit engagement letter and what should be the contents of audit engagement letter? This is what we are going to now cover. Okay, so it says, according to 210, what is R means revised, you don't have to remember it for your exams and all. Okay, so according to 210, an auditor shall agree the terms of audit engagement with management or those charged with governance as appropriate, and the agreed terms of audit engagement, whatever terms they agree upon, it should be recorded in audit engagement letter. Or it says any other suitable form of, what is the word? Written. I told you either written agreement or audit engagement letter, but what is more popular? Audit engagement letter. Okay, so what is the content? Agreed terms of audit engagement. What do you mean by word engagement? Did I tell you? Engagement is work. Okay, so whatever terms of audit work we have finalized upon, it shall be recorded in something called as audit engagement letter. Now a question can be asked from this part, that what should be the contents of audit engagement letter? Okay, so we are going to first cover these 5 aspects. Okay, any audit engagement letter, make it very clear in your minds, guys, that who is going to issue the audit engagement letter? Auditor is going to issue to whom? Auditee. So it is going to be on whose letterhead? Auditor's letterhead. Okay, so what is he going to write in the audit engagement letter? Number 1, the objective and scope of audit, that you have appointed us for company audit or income tax audit, etc. Then make it very clear, responsibility of auditor, our responsibility is only to express opinion. Okay, third is responsibilities of the management, that you shall be responsible for preparing the financial statement, you shall be responsible for internal controls, etc. So it's better now if you make our responsibilities very clear in this document. Then we can also mention that since you are a company, this is the FRF that is applicable on you, better to write it in the AEL. Okay, and finally, you know, we can give them, you know, a reference to the expected form and content of any report. Let's say we can give them a copy of draft report for their reference. We can attach it to the audit engagement letter, that this is how we are going to report, and these are the things which you have to keep ready, etc. So we can give them, you know, reference, basically copy of an audit report. So what are the 5 things that should be there in the audit engagement letter? Number 1, objective, scope, my responsibility, your responsibility, applicable FRF, and I can also attach a copy of the reference for your reference, a draft audit report copy. Are you all okay with this? But apart from this, guys, in addition to the above, I can have all these other points also. What are the other points? Let's say, see, sometimes I told you guys, you know, most of the people in India, they think if, you know, the financials are audited, that means it is fully correct. There is no element of fraud, nothing. But we have to educate everyone that, you know, because even if we have audited the financial statements, because of inherent limitations of audit, I would not be able to give absolute assurance. I'm only giving what? Reasonable assurance. And even if after I do the audit, some misstatements might be there, right? So it is better to tell people. So we can also mention the fact that because of inherent limitations of audit, there is unavoidable risk that some material misstatements may not be detected, even though the audit is properly planned and performed. So tell them in advance that there might be misstatement. Don't take it as a guarantee that the financial statements is now free from material misstatement. Okay. Now, so this was an additional point. Now, next point, arrangements required at management's end. So we can also include it in AEL that okay, we are going to come, we need a table to sit, we need one system from your end so that we can access your data and all. So we can tell them all these things, right? Okay. Then again, all right, the most important part, will you not write about, I have seen students writing this as point number 1. However, if question is asked, obviously this is an important matter, but yeah, first 5 things is you have to mention, and then the AEL may contain things about fees and all. Okay. Then yes, arrangement required at management's end. Okay. Then you can write about fees. The fact that audit process may be subject to peer review under Chartered Accountants Act 1949. So please understand, guys, what is peer review? This is a chapter there in your syllabus, but do you have a brief idea what is peer review? Absolutely. So another chartered accountant will come to our office and see whether one particular assurance service that we provided was done properly or not. So okay, let me put it in this way. Let's say we audited the client X Limited. My CA firm's name is PQR and Company. Okay. Another CA firm appointed by ICI will come and check the work, will come to our office and check whether we did the audit of X Limited properly or not. Yes, but why do we need to state this fact to X Limited in our AEL? What is the logic? Absolutely, absolutely. Because we are telling them in advance that I might have to disclose my working file, which will contain a lot of your data, to another chartered accountant. But you don't have to worry. Why? Because he it is also work from him. He shall also be bound by the principle of what? Confidentiality. Okay, so it is better if you tell them in advance. So you can mention the fact that audit process may be subject to peer review. Okay. Now guys, what did I tell you? Audit engagement letter, it is going to be made in auditor's letterhead. So generally we make 2 copies, we give it to the management, ask them to keep, sign and seal it. They'll keep 1 copy with themselves and they'll return 1 copy with us. So we will just make a small request towards the end, a request to management to acknowledge receipt of audit engagement letter. When they acknowledge, that means what? They are agreeing to the terms of engagement outlined there. Fine. Okay. So these are, the question can be asked, what is the content of audit engagement letter? Very simple topic. Okay. Now, the next topic that comes into, our mind is basically, are we supposed, guys, are we supposed to, come up with this audit engagement letter in every audit? Let's say I did your audit. This is the first time I came up with an AEL. You signed it, etc. Next year also I'm your auditor. So should I be sending you another AEL?
It's not mandatory.
Okay.
But when there is a
Change.
in
Okay.
agreement,
So generally, see, it is not compulsory that fresh AEL needs to be sent every year. But if there is some changes, major changes, then it is better if we send AEL every year. But then I would always recommend, even if there are no changes, it will merely be a copy paste of your previous AEL. Do it. No, it's a healthy practice. Okay. What if the management has the tendency to forget things? It's better if you reminded them. It's okay. All right. So the point is, in case of recurring audits, do we need to send fresh AEL every time? So the point is, on recurring audits, the auditor shall assess whether circumstances require the terms of audit engagement to be revised. Okay, and whether there is a need to remind the entity of existing terms of the audit engagement. So the auditor will have to check, see the word, mark the word, whether circumstances require the terms of audit engagement to be revised. And if the auditor feels that the management, they have the tendency to forget things and all, so he might send whether there is a need to remind the entity of the existing terms. Are you all okay with this? Okay. So it says auditor may decide not to send fresh or let's say new audit engagement letter or other written agreement everywhere. It's up to him, okay? But then please understand, this question might be asked that in what circumstances should the auditor be sending fresh AEL? What are the circumstances? So what I have done here is, for your easy understanding, I have categorized the points into three parts. One is external changes, then second is changes in or from management, and the final is changes from the auditor. So if there are changes, basically fresh AEL should be sent, okay? So it says, let's say point number one, if there is a change in legal or regulatory requirements, for example, there is new Companies Act requirement, there are new GST laws, etc. So then it is better that we come up with a fresh AEL, okay? Then if there is a change in what? Financial reporting framework. If there is a change in particular reporting requirement, let's say now this company comes under the purview of reporting for internal financial controls, okay? So please understand what are the 3 points. These are changes which are not in the hands of management, neither it is in the hands of the auditor. So we call it as what? External changes. You don't have to mention this particular heading in the exam, but only for your understanding. So one, what is the point? There is change in legal or regulatory requirements, there is change in FRF, and there is change in reporting requirements. Let's say CARO 2020 is applicable now. So there is a change in what? Reporting requirement. Are you all okay with this? Second, if there is change in or there is some change from whose side? Management. Okay. So let's understand, if there is significant change in nature or size of the entity's business, the business has altogether changed. Okay. Or let's say if there is a change in TCWG or ownership, the company has been taken upon by some other company. So you must have sent the previous AEL to the old management, but now a new management has come in, so it is better to give them what? Fresh AEL, okay? Then if it appears that management has misunderstood the objective and scope of the audit, okay? And then if there is any revision required in the original engagement letter with respect to management, okay? Now changes from the auditor. What if you change the fees? What if you change your audit approach? So it says it is necessary to modify audit approach to be in line with the latest pronouncements of ICAI. So what if you change your audit approach? Okay, generally what happens, guys, I think there is one point which is missing here. Basically, you can also add one more point with respect to this, what about the contents of AEL. You can also mention that, you can share a tentative schedule with them, or tentative timetable of audit with them. Why am I saying tentative schedule of audit, or let's say tentative plan of audit? Why am I saying this? Because we shall never discuss with them our audit plan in detail. We should always leave some element of surprise, or else they'll prepare everything in advance and keep it. And now please understand, when I say I'm sharing tentative plan of audit with them, I'll just tell them these are the things I would like to check. But now if there is a change in your audit approach, so don't you think you should be sending them a fresh AEL? Yes. So how many points, guys, we have? There are a lot of points. 3 points here, 5 here, 1 here. So 5-7 points you have to remember. Okay. Again, let me tell you, the headings are only for your perspective to better organize the answers. Is this clear? Okay. Now, let's say, guys, if there is, you have accepted the audit. I mean, let's say preconditions to audit were present and the common understanding is also there. Okay, you have accepted the audit. Now, after your acceptance, management tells you to make changes in the contents of AEL. Will you do it?
Depending upon the nature of change.
Depending upon the nature of change. Okay, let's say they ask us not to check inventory. Okay, do we mention objective and scope of audit? Checking inventory, will it be a part of scope? So they are now asking us to remove inventory item from the scope of audit. Will you do it? No. We'll ask explanation and all, but then obviously this will amount to what? See, scope will be defined by the law. They are no one to define the scope, and if they are asking us not to do this and that, this would amount to limitation on the scope of our audit. Okay, so we'll not perhaps agree with it. But then let's say they make a very simple request. Sir, you shared your tentative plan with us in your audit engagement letter, and as per the plan you were supposed to start your audit, let's say from 25th of August, but then our accountant is on leave for 3 days, or our office is under renovation, so can you just start it after 3 days of time? Seems justifiable. So will you agree with this change? Yes. Are you all okay with this? But yeah, so if you agree with the change, don't you think the new requirement should again be jotted down in a fresh AEL? Yes, the thing should be as much clear as possible, right? So let us now read the last part of the chapter, change in terms of audit engagement. Okay, so it says the auditor shall not agree to change in terms of audit engagement where there is no reasonable justification for doing so. So what is the key word that you have to remember? Whether there is any reasonable justification to do so. Okay, now again please understand guys, if let's say management is requesting us something which would make me convey lower level of assurance, will I accept that thing? No. So if prior to completing the audit engagement, the auditor is requested to change the audit engagement to an engagement that conveys lower level of assurance, they tell us, okay sir, we had appointed you for audit and all, so sir, don't check internal controls, you just check things, do like something like you are doing a review. So in review, I told you, in auditing and review, don't we give a lower level of assurance? So if management has asked us to do something like this, will you accept? No, your acceptance, your appointment was with respect to what? Audit. How can you ask me to do something which is conveying lower level of assurance? So if this is a case, we are not going to accept for the change. Okay. Third, it says, if the terms of audit engagement, now let's say if you agree to change, if the terms of audit engagement are changed, the auditor and management shall agree on and record the new terms of engagement again in writing. Yes or no? So again they should come up with new AEL. Yes or no? With new terms and conditions. Is this clear? Okay. But then let's say now you don't agree to management's change request, and then now management is not letting you to continue. They tell, no, we are not going to let you check the inventory. What will you do? Withdraw. See what points is mentioned. If the auditor is unable to agree to a change of term of condition, a term of audit engagement, and is not permitted by the management to continue the original audit engagement, the auditor shall withdraw from the engagement where possible. Withdraw means what? Resign, basically, if it is allowed by the law, and determine whether there is any obligation, either contractual or otherwise, to report the circumstances to other parties, such as those charged with governors, owners, or regulators. So when he withdraws, obviously you all know guys, let's say for in India, for companies, if he resigns from a company, he has to file a form with ROC. It is called as 3 ADT 3. So don't worry, I'm going to teach you up in Companies Act. Okay, so ADT 3. So he has to file with ROC. So the last point is what? If auditor doesn't accept the request of management and management is not letting the auditor to continue, so he can withdraw, and along with withdrawal he would see if there is any requirement to report the circumstances to other parties. Okay, now please understand guys, let me put it in this way. Before you accepted the audit, let's say in preconditions only, management, all preconditions are present, but then before you accept the audit, the management tells you, sir, see, we were planning to give you 30,000 as audit fees, but if you don't check our inventory, I'll give you 50,000 as audit fees. You don't check our inventory. This is the offer that they're putting. Will you accept the audit? This means what? They're putting a limitation on the scope of our audit. So we have one small topic, last topic to cover guys. Very simple. Again, if you go back to on page number 1.14, limitation on scope of audit prior to audit engagement acceptance. So before you even accept it, they have imposed a limitation. Don't check this, don't check that. So will you accept the audit in that case? So it's simple. See, if management or TCWG imposes a limitation on the scope of audit work in terms of a proposed audit engagement, such that auditor believes that limitation will result in auditor disclaiming an opinion on the financial statements, the auditor shall not accept such limited engagement. So just for the example part, you can only read the example, not very important. For example, management imposes a term at the time of appointment that auditor will not carry out physical verification of any asset. This acts as a limitation on auditor scope. Therefore, auditor should not accept the engagement. So example perhaps will give you a better understanding. You don't have to read the content part. But this is limitation of scope prior to audit engagement acceptance. So you are not going to accept. But what if they impose limitation after your acceptance? And they are not letting you continue, so you are going to think of withdrawing from the engagement, plus if there is a need for any reporting to the third parties as per the circumstances, you are going to do it. Are you all okay with this? So with this guys, our standard is over. What all things did we cover in this standard? Number one thing, when are you going to accept an audit engagement? So you have to cover two things, preconditions and common understanding. How many preconditions we covered? 2. Management has an understanding of FRF, and management acknowledges its responsibility with respect to 3 things: preparation of financial statement, internal controls, and they are going to provide us with three things:
Yes.
information for
Access to all information.
all information with respect to financial statements, additional information, as well as
Unrestricted access to all
unrestricted
employees.
access to all employees. These are preconditions, but only if there are preconditions you will not accept the audit. You will have to develop what? Common understanding. How can it be developed? Either through a formal agreement or AEL. Then we read about the contents of AEL. Then do we need to come up with fresh AEL every time in recurring audits? So we read about certain circumstances where you have to, it is healthy practice if you come up with fresh AEL every time. So what are the circumstances? I told you it can be external change, management change, change from auditor. Okay, what if you accept the audit and then management is asking you to make changes? So you have to see whether it is reasonably justifiable or not. If there is no reasonable justification, you are not going to make a change. Okay, and you are not going to accept any change which would want you to give a lower level of assurance. Okay, let's say you did not accept the management change and they are not letting you continue. Probably what are you going to do? Withdraw and report. That's it. Okay, so with this 210 is over. We have certain questions, guys. After each of the standard is over, I would like you to at least go through the questions so that you have an idea from which part of the standard questions might be asked. Okay, done. Okay guys, now a very basic standard, again one of the favorite standards of CA interest students, audit documentation. It is easy. Well, let's quickly go through it. 230 audit documentation. Okay, so what does audit documentation mean? All of you remember I taught you the audit process today. Okay, so when you apply audit procedures, then you get something called as audit evidence, and then you draw audit conclusions on the basis of evidence. So audit documentation means recording all these three aspects. So audit documentation refers to the record of audit procedures performed, the evidences that you have obtained, and the conclusions the auditor has reached. Okay, all right. The audit documentation, you can also remember, we also call it as what? Working papers. All of you know this. Okay, and the process of collecting and preparing working papers is also known as what? Documentation. Okay, so very simple point. All right. Now again, what is the purpose? I mean, it says the nature of audit documentation. Why is it required for an auditor to have adequate documentation? Okay, so please understand it in from two perspectives. Okay, did I not tell you that when the auditor gives an opinion, he is not going to come up with an opinion randomly. The opinion should be backed by some evidences. Okay, so this documentation will be basically help in supporting his what? Opinion. Okay, so the first point is a sufficient and appropriate record on the basis for the auditor's report. So what is the first word that you have to remember? It provides a basis as to why the auditor came up with this particular opinion. It serves as what? A basis, number one. And secondly, guys, did I not tell you? Okay, see, if a fraud is detected in the company after you have done the audit, okay, you shall only be able to save yourself if you are able to prove that you did the audit in accordance with standards on auditing. Then only the inherent limitations of audit is going to save you. Okay, but how are you going to prove? You have to show all the documentation. So that is why documentation, it also acts as an evidence that audit was performed in accordance with what? Standards on auditing and complying with all the legal and regulatory requirements. So there are 2 points, guys. Okay, number one, what is the requirement of documentation? It serves as a basis of your what? Opinion. And secondly, it serves as an evidence that you complied with the standards on auditing as well as all the other legal requirements. Are you all okay with this? Fine. Now again, a very simple topic. What is the purpose of audit documentation? Why do we even keep documentation? So the two basic reasons I have told, but then again, let's say you are a new article in my office and then it's a first day and I want to send you to the audit. Okay, so I call you in my cabin and I tell you everything. See, for you have to start with asset side. For land and building, you do a physical verification first, then check upon the title deed, and then ask for the valuation certificate. For inventory, you do a physical verification, check the condition of the inventory, compare it with the invoices. Like this I gave you instructions for 45 minutes. Probably when you go to the audit, you will not be able to remember more than half of the things. Yes or no? So when I say audit documentation, it simply means I have to plan everything. So how the audit needs to be done should also be what? planned, documented, should be planned. So can I say, if I have audit document, this is like I can say the benefits of audit documentation. Okay, so will it assist the engagement team to plan and perform the audit? See, if everything is documented, this is how you have to check land and building, this is how you have to check inventory, probably a newcomer, a new article will not miss out on important areas. He'll follow the sequence and he'll be able to perform the audit also in proper manner. So number one thing is audit documentation assists the team members to plan and perform the audit. Okay, similarly, like let's say you have done the audit. Okay, you have done your part of work for today. So in the evening, probably your principal will go and supervise your work. So if everything is properly documented, the supervision also becomes better. Yes or no? So it says assisting members of the engagement team responsible for supervision to direct and supervise the audit work. So audit documentation will be useful for direction and supervising the audit work as well. What was the first point? To plan and perform the audit. Second, direct and supervise the audit. Okay, now third point, it makes the engagement team accountable for their work. Let's say three of you go to the audit, okay, and I told that you have to check asset sides, you have to check liability sides, and you have to check P&L side. Okay, let's say after 2-3 months or something we find out with respect to fixed asset or inventory. Then I look at the working paper. Hey, who checked the inventory portion? So you know what will happen in all the working papers? If inventory was handled by her, she will be putting her signature. So 2 months down the line, 6 months down the line, can I basically hold her accountable for checking upon the inventory aspect? Yes. So it says it enables the engagement to be accountable for their work. Why? Because I told you, they sign documents prepared are signed and filed. Okay, and the spell there is mistake, and filed by engagement team, make them accountable for how they executed the planned procedure. So they will prepare the document, they'll sign it, they'll file it. So this will make them what? Accountable. Okay, 3 points. What are the 3 benefits, or let's say purpose? Basically, plan and perform the audit, supervise, direct. Okay, third, it will hold you responsible for the work done. Okay, next, retaining a record of matters for continuing significance to future audits. So the next benefit of audit documentation is what? Future benefits, future audits. It will serve as a reference. You will refer to it in the future audits. Let's say I am doing the audit this year. Hey, how did I do the depreciation calculation last year? Let us take the audit file out and I'll see, okay, this is how the depreciation calculation was done. So is it not acting as a reference in my current year audit, right? So it will help you for future audits as well. Okay, now again, if we want to ensure quality, whether we have done proper work or not with SQC1 and all, again, enabling conduct of quality control reviews and inspections in accordance with what? If any quality control review is done, probably we'll have to show them that what? Documents. Okay, so quality control review is more like something internal. But let's say if the client was engaged in a fraud, the CBI came to the client and then now they have come to the auditor also, and they are asking you, how did you do the audit and all? So won't you be showing them the documents? Yes, this is more like what? External investigation. So it says enabling the conduct of external inspections in accordance with the applicable legal, regulatory and other requirements. So these are the purposes, guys, why one should have audit documentation. What are the points again? Number 1, plan and perform the audit, direct and supervise, will hold you accountable. Future audits for quality control purposes and for external inspections also. Keywords, if you remember, it is going to help you. Is this clear? Done. Okay, now all right, we have few more points here. It says form, content and extent of audit documentation. Form, then content and extent of audit documentation. This is the heading, but the word has not been defined. Form, what do you mean by content, and let's say extent. So guys, when I say form of audit documentation, it simply means whether you want to have, let's say, hard copy versus, let's say, soft copy. Okay, probably these days when you go for the audit, your principal must have, probably they give you a laptop and also all the documentation aspect you note it down in your Excel or Word only. But then when I used to go to the audit, the concept of laptop was not much prevalent, so my principal gave me a diary to note down everything. So this is also what he gave me, a file kind of thing, loose papers, and then I had to bound it in a file. So hard copy versus soft copy, simple. When I say content, you already know what are the things that should be there in your audit documentation. Can I say audit procedure, audit evidence, and audit conclusions reached upon? This we covered in the definition part, yes or no? Okay. And when I say extent of audit documentation, guys, can I put it in this manner? I mean, just one idea. Extent of audit documentation will be directly proportional to the size of the entity. Just one idea, one thought. How much, see, if it is a very big client, the more, don't you think the documentation will be more? If it's a small client with only 3 transactions in the entire year, probably 2 or 3 pages of documentation you are sorted, right? So extent of documentation will somehow, I can say, be proportional to what? The size of the entity. Anyway, this is not very important, but yeah, let's understand the point here. It says, the auditor shall prepare audit documentation that is sufficient to enable an auditor, experienced auditor having no previous connection with the audit, to understand. He should have audit documentation in such a manner that any other auditor, okay, let's say having no previous connection with this audit, will understand what the nature, timing, and extent of, did I tell you this, audit procedures already? Then the results of audit procedures performed. What is the result? Nothing but what? Evidence. They have mentioned it, audit evidence. And finally, audit evidence, and also the point says what? Any significant matters, and ultimately the conclusions reached thereon. So this is basically what it is only talking. Don't you think it is only talking about content? They have not mentioned anything about form or extent. Rather, form means simply this. That is why I made you understand. Form can be a hard copy, it can be a soft copy, electronic copy basically. Content again, AP, AE, and AC. Okay, but then I feel this can be an important question. When you're covering standards, guys, any question with respect to factors will always be important. And why I say it important, because these are topics which you might forget. You see the points here. What are the factors affecting form, content, and extent of documentation? There are no headings as such. Okay, and if this question comes, you will not be able to write it in your own words or something like this. So you have to be very careful about these questions. Okay, so it says factors affecting. What are the factors affecting form, content, and extent of audit documentation? Okay, so okay, can I put it in this way? I told you this. Okay, yes. Can one factor be size of the entity? Yes. Okay. Second is nature of audit procedures performed. So what procedures you have performed, will it also impact the size and the extent of documentation? Yes, can you give me an example? What procedures you have performed, will it also impact the size and the content of your documentation? Tell me, guys. Okay, I'll give you one example. Okay, let's say you are vouching the purchases, and the client has 5,000 purchase transactions. You have only checked 500 of them, or let's say 50. Okay, just an example. So can you at least, it totally depends. Can you take at least a note of the voucher numbers that you have audited, you have checked? You should keep it in your working papers. In some cases, if there is a facility, can you take a photocopy of all those 50 vouchers? But it is not necessary, right? You can just take a note of what? The voucher numbers. That would be sufficient. But let me just give you one more example. But let's say there is a order against the company from the High Court. It is a 150-page order and it is very significant. Now, will you only keep that order received, or will you think of keeping a copy of the order? Yes or no? Because this is significant. So is it impacting the extent of our documentation? So what procedures you apply, what kind of evidence you are trying to gather, all this will matter a lot. So see the point, the procedures applied. Okay, and then I think we had the significance of audit evidence obtained. See point number 4. I told you purchase vouchers, only by noting the purchase voucher numbers is sufficient. But if it is a important document from High Court and all, probably you'll keep a copy of the entire order. Yes. Okay. Anyway, all right. Now, identified risk of material misstatement. You have identified a lot of misstatements. So when you have identified a lot of misstatements, your working papers, will it increase? What was the misstatement found? How has it been tackled? What did management do about it? So again, your working paper is going to increase. So identified risk of material misstatement. Okay, and again we have a point on this. See, nature and extent of exceptions identified. This is nothing but again risk of material misstatement. What is the nature of extent of exceptions? Okay, this was what, how many, let's say, misstatements are there, and then what is the nature of the exceptions? So again, this will have an impact on what, the documentation. Okay, now let's say in the entire audit you have taken a lot of judgments, so you have to take a note of the judgments and what made you take that decision. You have to understand, right, the logic also. So the more judgments you take, the extent of documentation, will it be impacted? Yes. So the extent of judgment required in performing the work. Are you all okay with this? Okay. Then the need to document a conclusion or the basis for conclusion. Again, the basis for your conclusion is also something which you are going to take a note of it. So if your conclusion, if the explanation part of your conclusion is lot, it is going to again impact the size content of your working papers. And finally, audit methodology and tools used, whether you did things manually or you are again using some, let's say, tools. Let's say you are using Excel for maintaining working papers, or let's say, do you have an understanding of CAAT tools? Yeah, computer assisted audit technique. So if you are using CAAT, probably sampling and all will be done by the systems itself. So probably all these factors are also going to impact your working documentation. Okay, so this can be an important question, I'm not very sure, but then if it at all comes, why I'm making you mark it as important, because you have to be careful. Okay, I don't want you to write haphazard answers for all these points. Be very careful. Are you all okay with this? Fine. Okay, now coming to almost towards the end only, not much left. Okay, now let's say, guys, that there are in one particular audit, let's say we are doing the audit of X Limited, there are 3 articles who have been sent to do the audit: A1, A2 and A3. Each of them will be doing their respective areas of audit, and each of them will be maintaining their what, working papers. Yes. Okay, now my question to all of you is, when they're doing, see, in simple word, can I say that you should maintain your working papers when? Towards the end of audit, towards the beginning, or during the audit? As and when the audit progresses. Okay, generally what happens if you keep it for the last, the human tendency you all understand, right? If you keep it for the last, probably it will never be updated. Okay, so generally it is being said that you should maintain your audit documentation as and when your audit progresses. That means 230 says you should maintain your audit documentation on a timely basis. Okay, but then let's say each of them have maintained their audit documentation on a timely basis, but then please understand, guys, what happens. Let's say each of them have their working papers, but there is a concept now. Ultimately, these working papers of A1, A2 and A3, they belong to the same client for the same financial year. Yes, so they have to be basically assembled in a file. Now let's say this is a file, A1's document, A2's document, A3 document should all be assembled and put in one file. So the topic that we are now going to discuss is basically, when should this assembly work be done? This assembling of audit file, when should it be done? Okay, do you understand the concept of audit file? Okay, now audit file, few basic things. If we call it as audit file, now this audit file, will it pertain to one client, or will it have working papers of multiple clients? One client. And when I say one client, will it also pertain to one financial year? For next financial year, you will have a separate audit file. Are you all okay with this? Anyway, so now this audit file, can it be physical? Can it be electronic also? Yes, we all know this. So the question is, when will the assembling of audit file be done? Okay, so you know what, if again this standard has given some relaxation here, if again it says that do the assembly process also during the audit, it might take a lot of time. So what the standard has said is basically, you can do the assembly after giving the audit report, after you are done with your audit report. Okay, so SQC1 has given certain timeline with respect to assembling of the audit file. Okay, so let's read this point. It says assembling of final audit file. So this is the meaning of audit file. I told you, can it be one or more folders? Can it be on a storage media, pen drive? Can it be, that means it can be physical or it can be electronic also. Anyway, so what is the requirement? It says the auditor shall assemble the audit documentation in an audit file and complete the process of assembling the final audit file. What is the word given? on a timely basis after the date of auditor's report. So please understand, as per SA 230, assembling of the audit file needs to be done on a timely basis after the date of auditor's report. But everyone knows, even chartered accountants will become lazy and they'll never do it. So then what has happened is SQC1 has given us a more specific timeline. SQC1 says that assembling of audit file should be done not ordinarily more than 60 days after the date of audit report. So the limit of 60 days is given by SQC1. What is the timeline given by SA 230? They only said timely basis after the date of audit report, but this SQC1 has made the timeline more specific, 60 days after the date of auditor's report. Are you all okay with this? Now, I feel a very important question for your understanding, you need to understand. Okay, so let's say guys, when the assembling work is being done, I mean, see, working papers are already there. You just are assembling it, organizing it in a proper logical manner or sequential manner, etc. You're filing it. Okay, so what I'm trying to tell you is, should you be making any changes to your working papers when you are assembling the same? Should you be making any changes to the content of the working paper? Why? Have we already issued our audit report on the basis of these working papers? So if you change the working papers now, it might impact the opinion which you have already given. Yes, so you should not be making any changes in your working paper. But there is one exception. If the changes are administrative in nature. What do I mean by administrative is, let's say you are, you had so many pages, okay, you have now filed it into one file, so you have just given page numbers. Can you do that? Yes, administrative change. Okay, let's say you have put an additional page in the front and you have made a proper index. Can we do it? Okay, let's say depreciation sheet, I calculated it once, there were a lot of mistakes, I mean scratch and all, so I calculated another sheet fresh. So can I discard the old sheet? It's a we have two versions of the same thing, so can I discard the old versions? Right. So all these things you can do, but you cannot change the content whose procedures applied. Can you change this? Evidence is obtained, can you change this? No. So please understand guys, the completion of assembly of audit file after the date of auditor's report is an administrative process and does not involve the performance of new audit procedures. Do you all agree with this? Okay, so it says, changes may however be made to the audit documentation during the final assembly process if they are what? Yes, please mark this point. If they are administrative in nature. Okay, now examples of such thing you have to remember. What could be the examples of changes which are administrative in nature? See the point, deleting or discarding, what is the word? Superseded document. What does it mean? Having newer versions of the same thing. So if I tell you did depreciation calculation thrice, final one was correct and proper format and all, so remove the first and second one. No need to have duplicacy basically. Okay, then can you sort, collate and cross reference? What do you mean by this? Let's say you were asked to do the liability side, she was asked to do asset, you were asked to do P&L. So can I arrange asset first, liability first and then P&L? But then if I am putting the papers of asset first, there will be fixed asset, there will be depreciation also, but depreciation will also be a part of P&L. So can we give cross referencing? Yes. Okay, this is nothing but administrative work. Okay, signing off on completion checklist. See, I have been asked to make all the documents arrange all the documents properly in a file. So I'm just putting ticks. Okay, asset side done, liability side done, P&L expenses side done, income side done. So can I make a checklist and put a tick? Signing off on the completion checklist relating to what? Final audit process. Okay, and sometimes guys what happens, please understand, let's say I applied a procedure and I have obtained an evidence. The evidence is in the client's laptop screen and I told them to give a printout, but somehow the printer was not working then. But I have formed my opinion on the basis of this evidence. The management told me that okay sir, once the printer is working we shall give it to you. But now when I am finalizing my working papers, should I not ask the management, hey, you were supposed to give me that printout of the report, give it to me? Yes or no? Should it be a part of your audit documentation? Yes or no? It's not a new evidence that you have obtained. It's a evidence which you had considered for giving your opinion. It's just that you did not take a printout then. So take a printout and keep it in your file. So it says documenting audit evidence that auditor has obtained, discussed and agreed with the relevant members of the audit team before the date of something which was discussed and considered before the date of audit report only. But let's say you did not get a hard copy. So you can obtain the same and you can, the point is what guys, it should be before the date of. So these could be some examples. I mean, I feel a question might be asked from this part. Again, if it is asked, I don't want you to write irrelevant answers. So go through it. Okay. All right. Again, if I tell you very simply, guys, who is, I mean, these working papers. Okay. Again, it has to be kept by the auditors. Okay. So there is a retention limit prescribed. Okay. Now, retention limit, again, you know, it says it should be the retention period for audit engagements ordinarily is not shorter than 7 years from the date of auditor's report. So you have to maintain your working papers. You have to keep your working papers for at least how many? Not shorter than 7 years. From where? Not from the financial year, but from
Auditors.
when you submit your audit report. From then the 7 years will be counted. Are you all okay with this? Okay. Now finally, when I talk about ownership, guys, who is the owner of the working paper? Auditor. Okay. So auditor is owner of working paper. Now if I put it in simple terms, should he be sharing his working papers with everyone? No. Will confidentiality clause needs to be kept in mind, that we covered in essay 200, right? Now what I'm trying to ask you here is, let's say guys, if you are my client, if you are the management, and it's my working paper, this is my working paper. Okay, this is my working paper. Should I be, you are asking me for my working paper, should I be giving it to you? See, I have made this working paper from the data and documents that you had given. Yes, so why do you even need my working papers? So, but yes, let's say you give me a valid reason. Sir, the depreciation calculation you did know was in a proper format. So if you could give us the format, next year we'll try and maintain it in that manner. Okay, 1 page depreciation format, you give it to them. But will you ever give your entire working paper? No. If you give them your entire working paper, there will be no element of surprise in the next audit only. They will know each and every aspect of your audit, which we never would want. Are you all okay with this? Am I going to, share my working papers with any third party? What if the client permits? Okay, let's say this is the last year of my audit. There is a new auditor coming and he is only my student. Okay, so he's asking, sir, your working papers, if you can give, it would be of great help to me. I ask the management tells, okay, give. Can I give? If the client permits, I told, see, the confidentiality principle should not be violated. Okay, if let's say government is asking me for the working papers, if CID and all, CBI comes and they are asking me for the working papers, am I now bound to give? Yes or no, right? So with respect to ownership, I have a very small, let me check. Yeah, with respect to ownership, can I put, see it in this manner? Audit documentation is the property of the auditor. Is sharing with clients permissible? It says make portions of working paper available to the client. It is up to my discretion. If I don't want, I will not share. But will you share your entire working paper? No. Okay. Second is sharing with government authority. Only if it is my legal obligation to do so. And third, sharing with third party. Only if the client permits. So that is why I have referred here what? I wrote the reference. Refer essay 200, which is what? Confidentiality. Clear? So very, very simple. It's very simple. All right. So with this, the ownership, with this, our essay 230 is over. Okay. Done.